Hi guys, welcome to Jan 2026 complete solution of CA intercosting. Now one thing, and I will be apologizing for that. This time I am horribly late, and reason for that is very simple. You might like to be thinking once I tell you the reason कि बुड्ढा हो गया इसको कुछ समझ भी नहीं आता. So what happened was that on the day when the paper was held, we asked somebody to send us the solution. Send us the question paper. That guy sent the question paper, part 2 of it, but of Jan 2025, and on that it was written Jan 2026. In excitement, I did not even try to be thinking that this could be an error. I solved the entire thing. Then he sent me off part 1, so I made off part 1 also. And then, as I always do, I released the complete video of part 1 of Jan 2026 and part 2 of Jan 2025 without realizing that 1 year ago, bloody, I solved the same paper. In fact, many times in that I told that the questions are getting repeated. ICAI is such an idiot. But then I was the idiot in that. So I released that complete thing immediately on the day when all the papers were over. But then few comments have started to come. Sir, Jan 26 ka upload karo. That is when I realized what goof up I have done. And after that, I went out somewhere. Okay. And the moment I came back, then I started to realize, because some people started to tell me, sir, question paper was very tough this time. And I was thinking question paper was so easy. Which are all these idiots who are trying to be doing that? So then, in any case, now whether I've grown old or not, that is your judgment. But then here it is, the complete paper. Now, Aisa goof up I have never ever done in last 20, I guess 4 years now. But then that's okay. It happens. It's human. Okay, so let's start it off. Now, this entire video, I'm going to be dividing in few parts. Okay, and the timelines are there below. In case you want to go to a specific part, please, you all can be doing by reading the description. And everything that I say, if you have to find out that thing, then there are links below. You all can be clicking on the appropriate link. Now, first of all, if you want the PDF of the complete solution, like always, message to us on our Telegram ID that goes by the name of @AJNext. Whenever you message your name, your phone number, and your attempt. So therefore, we can be keeping your details. Okay, that is one thing. Second, once you send us that, we will send you a complete link of the solution paper which is there. Now, I do not discuss the paper because I think it's no point in discussing. I try to be solving. I try to give out the complete answers. If you have to be solving, then because my only aim of doing this entire kind of an exercise is basically that I would like to help Jan 2026 students to verify whether their answer was correct or not, or if they made the error, how many marks they can be expecting. And second, if you're a future attempt student, then this kind of a solving will help you for your future papers. Okay. Now, this entire video I divide into few parts. First, how was the paper? I'll spend around 1 or 2 minutes for it. Then I will be giving out the final solutions of part 1 and part 2, only the final solutions for all the students. Okay, but that part will be mainly useful for Jan 2026 students, I think. Okay, those people who have given. So once I do that, then I'll start to be solving part 1 completely. I will start to be solving part 2 completely, and then the conclusion towards the end. Everything has a timeline. Those timelines are there. In case you want to go to a specific part, please do that. Okay. Now, in any case, just a small thing. Most of the paper that was there, I'll not say the complete one, was there from our book, the latest book which is there. Okay. In case you want to avail that course, then our website is www.ajnext.com. You all can buy the course from there. Once you buy, your lectures automatically start. There's a soft copy option, there's a hard copy option up and so on. But no need to be calling. You see that thing, you can try to watch the lectures on your internet browser like Chrome or like Edge or something, or you can download our app also, the Android or the iOS app, and you all can watch the lectures. One added advantage for using the app is you can download the lectures within the app. So therefore, you do not require a stable internet connection at all times. Okay. Now, every question where it is there in our book, I have made an index for that. Okay, so therefore, for part 1, all the 15 questions, there is a similar question in our book that is written over here. Same way for part 2 also. Part 2 is slightly down. For part 2 also, there is a final solution. Okay, means a similar question is there in our book which is that particular question, that complete list I have over here. This is basically just to tell some of the students who always try to be thinking, sir, paper should be from your book. Honestly, if the examiner is intelligent, he should come out with the new questions each and every time. It should not be there in any book. Okay. In this attempt, to be very honest, there were 2 questions that were completely new. Okay. So, that I've written over here, new question, although bit similar to which questions that I've given. Okay, so in case you want a reference that this question is there in our book where, so therefore that I've written over here. Okay, so let me start away with the first thing. How was the paper? Chali. Now, this is one part whereby I'll be discussing how was the entire question paper. Now, question paper, you all know, is always of 2 parts. You all have 30 marks paper, that is the MCQs. You all have a 70 marks paper, that is a descriptive kind of a paper. Okay. I can call the descriptive paper as a practical paper or as a subjective paper, whatever you all wish to be calling. Now, to be very honest, this time MCQs were far simpler as compared to whatever you all can be thinking also. Like question number 1, simple, straightforward, a common sense question. You have to try to find out how many hours and number of workers that will be needed. Material costing question, it was all on FIFO method. Very simple. There was nothing much to be done. CVP analysis, there was the data of 1 year. There were some changes, okay, for the next year. You try to see those changes and try to arrive at the answer. There are so many questions we all have done in cost sheet also and in CVP analysis also of such type. Okay, so I will regard still that question as very simple. Standard costing, it was simply a question whereby some variance was given and something you had to be finding out as a balancing figure. Okay. So therefore, based upon that, it was a 2 marks question. Honestly, a bonus kind of a thing for you because in that one of the variances was 0. So therefore, it's very easy. When some variance is 0, 2 informations become same. No, it's hardly a 30 seconds job because here you don't have to be writing the entire reasoning also. I have still tried to make all the proper notes, how you all can try to be thinking, but it was simple as such. Job costing question, we all have done a similar kind of a question, but R was very long. This was quite a small question. Okay. This out of the first 5 questions, I'll still regard as slightly a tougher one as compared to the first 4. Although we have solved a similar kind of a question in job costing itself. Okay. Then the first case scenario was on CVP analysis. Okay. If you all try to be thinking, we all had a similar kind of a question. In fact, products name were also same. XYZ getting replaced by, in our book, was XYS, whereby you have to try to find out the weighted average PV ratios up and so on. So exactly the question of that particular type only. Okay. So there were 5 questions in relation to that. If you all have solved that question in our classwork section, that you must have solved only. In any case, these things are there on YouTube also. Okay, please do note that all my videos for costing of my previous batch are there on YouTube channel. They are there in English Hindi mode. They are coming in full English. That will also be finished in some time. Yes, the latest batches are paid, but those are also priced very normally. Okay, you all can watch all these particular thing. I guess it was. I have written the reference also. This is which question number, so you all can be seeing that. Okay, please do remember that whatever references I have given, those are of my latest book. They might not exactly match with the question number on our YouTube channel because on YouTube channel the lectures that I've put are of the previous batch. Okay, then this was the last question of part 1, that was on material costing. In this CA, CI, all these things were given. You have to find out the EOQ. You have to find out the total ordering cost plus carrying cost up and so on. Okay. Manageable question. Okay. Again, out of the all other questions, this could have taken more time, but it was quite a manageable question. Then part 2. Part 2 was slightly more difficult as compared to part 1 for sure. Okay. That I'll accept also. 1 or 2 new questions. But if new question is a problem, that means your concepts are not okay. If it's a difficult question, then I will do understand that sometimes it will create a problem. But new question should not pose a problem. We are not here in 10th standard whereby, sir, exactly the same question should be coming in the examination. No. If you are expecting, then it is your mistake. Okay. Like first question, CVP analysis. You might not have seen this question in our book. Okay. But if you'll start to be solving it, it was Relatively a common sense question whereby the input was there, the output ratio is there, you multiply and then you have to pack the things in the boxes. You have to find out the number of boxes. Okay. It's a common sense question, 8th or 9th standard question. Should not have been a difficult one. Okay. Then there was joint products and byproducts question. Now this was on two fundas. One of them was depth of processing that we all have done in 6 to 7 questions. And the other one in this case was on how to apportion the joint cost. Now, in case at this stage somebody is thinking, sir, please tell us the answers also. I will be doing that in the next part. Okay. Third question was on labor costing. Try to find out the wages as per Halsey and Rowan. It is kind of the first question that is there. Now, this question was on cost sheet. If you know your advanced cost sheet whereby all the things come, should not have been a very difficult question as such. Okay. Then, sir, everything was easy only? No, I'll come to this. This process costing question was one of the hardest questions that you will be finding. And let me just tell you, there was no equivalent output in this. Okay. But it is one of the hardest questions. I don't think so that even many professors who release a video on the YouTube will be able to get the answers. If they ask from Chat GPT also, 99% I'm sure Chat GPT will not be able to answer this question. So this was a brilliant question. Hats off to that person who has made this entire question. Now you will be able to solve this only if your concepts are very good. Okay. And that is whatever we all try to be doing because we don't see any formulas for any chapter. We just try to be giving the concept. So this, you require good brains to be solving it. Overhead chapter, again, slightly a new question, but should not have been a very difficult question. This is actually combination of the overhead chapter plus service costing. Okay. Although I've written overheads only, but it is a mixture of them. In that, few things have to strike you all, especially how to make the equations and how to arrive at the final solution. That thing was tough in this question. In service costing, I have an institute whereby we try to train the air hostesses. I don't have means a question has. And you have to find out what is the total cost, how much to be charged, all those particular things. A manageable question. Again, we all have not done exactly a similar kind of a question. But then many questions that we all have solved, say of a school or of, the service, the transport sector up and so on. Quite similar to that. Okay, not a super difficult question. Now, this same question I've written over here in standard costing, but the same question we had, I think so, as a third last question in budgetary control. Exactly the same category of question, whereby you had to be finding out all material variances, all labor variances, all variable overhead variances. Okay. The same question was there in our textbooks in chapter number 7 of reconciliation. Get the profits as per financial accounts, get the profit as per cost accounts, try to do a reconciliation. Now, question number 5A was a horrible attempt on part of the institute to try to modify a question. If you all will see this, even if you read the first line, you will still start to be thinking, sir, same question we have in our book. Yes, we have the same question in our book, but in this, some final answer is given. You have to find out something else as a balancing figure, some expense. And that expense, if you actually try to solve the question in a correct way, it comes as a negative figure. So something is wrong bloody with this question. Now, what will be your final answers, that we all will see, and I'll try to solve it completely for you also. Standard costing. Now, this question in your module is there in budgetary control. In our book, it was there in standard costing because it is connected to fixed overheads. Okay. You have to find out the ratios. Although in this question, some ratios were given, some data was given. You have to find out the other things. Okay. This again, I will not call as an easy question. It was slightly a tough question. Then, CVP analysis, this is a simple question on finding out the opportunity cost. If you will not make this product, you will make which product, how much you'll be getting from there. Okay. Easy one. This again, if suppose some of your practical went bad, you could have got this time good marks in theory also. Every expense you try to classify as fixed or variable over here. And it is related to production, admin and S&D over here. Okay. So therefore try to do the classification. This was a gift from the institute. This question we all have done, and everybody, even if some other professor has taught you, exactly the same question you must have seen also somewhere. Okay, exactly the same answer I've also given over here. And then the last, there were 2 theory questions on activity-based costing and budgetary control. You know, this was the only attempt ever in last so many years. Because in all the attempts before this, I always say activity-based costing will always be coming in exams. This time I never ever told activity-based costing will be coming, and actually it never came. But then they put a small theory question on that for 4 marks. Okay. So for 4 marks, there was one question on activity based costing, but not a practical one. Okay. This was the only attempt like this whereby there was no question on activity based costing. Actually, this ends how tough the paper was. I would not like to be saying like, it is 4/5 or something. All those things, it's all subjective. But then I will say it is a manageable question, manageable paper. In case you knew your fundas, you should be getting 80 to 85 plus. That much you should be getting. Some people can be thinking, oh, so I get 80 plus, I will do this. If I get 50 plus also, sir, I will go for a Padyatra. You can be thinking all those things. But that is again a personal choice. I'm not trying to give ranks or something, because how can I try to be judging that how tough it is for all the students? If somebody is good, it will become easy for him. If somebody is not that good, it will become tougher for him. Okay, I leave that particular thing. I have told based upon the questions how easy or tough each thing was. Okay. Let's get on with the next part. I'll try to reveal the final solutions of each and every question. Chale guys, so in this part, I'll try to reveal the final answers for each and every question. Okay. Let me start off, but just few small things. In case you want to avail the latest batches, please visit our website www.ajnext.com. Although in case you're short of money, then I will say a better option. Don't call us for discount or something, because we have kept the prices quite less. But even the lectures which are there on YouTube are complete lectures. Okay. They come in English, Hindi mode, complete English mode. They are there on my YouTube channel. Soft copy I have put the tests also. I have put everything over there. Make use of it. That will be enough for you all to be getting 85 to 90 marks in your costing paper. Okay. And plus all the RTPs, plus all the new papers, in any case, I put on YouTube free of cost. Okay. So please do that. Second, for FM also, we have all the lectures of the latest batch again on my website. Those I'm not putting on YouTube till now. Let's see in future if I can be putting. Okay. So final answers in your this PDF. In case you want this PDF, please send us a message on Telegram ID @AJNext, and we'll be happy to share the PDF with you and some other important links that will be useful for you all. Okay. So now the time for final answers. Let's start away with the MCQs. Question number 1, this was your answer that I have highlighted in yellow in this entire book. Okay. Same way for question number 2, 83,100 will be value of materials consumed. Over here, the total cost of the spare parts will be 132,250. For standard costing, actual wage rate is 50.5. For job costing, your factory overheads absorption rate is 45%. Then 6 to 10, there were supposed to be 5 questions. Combined PV ratio is 47%. This is break-even sales for you. This is total profit for you. This is the current weighted average PV ratio. And this is the total profit at the current level. Okay. Then question number 11 to 15, the second case scenario that is there. EOQ and number of orders is over here. For question number 12, you have to find out T including the purchase cost, that is over here. For question number 13, if suppose the order size is not EOQ, it is 200 kgs, what will be your T including purchase cost? 81,02,500. Over here, annual demand 4,000 and 1,600. And lastly, the EOQ for the other raw material will be 200 kgs. Let's go over to part 2. In part 2, for question number 1, the cost per small box and per large box will be this and this. This will be the breakup of the packing cost. Okay. Then further, in joint products and byproducts, first of all, you will have to find out net joint cost, that is 1,44,000. And then the breakup of that will be this particular figure. The total profit currently that company is getting will be this figure. And then this should be processed further. This should not be processed further. Okay. Labor costing, these will be the wages as per Halsey and Rowan scheme. For cost sheet, there are a lot of things that these guys have asked. I'll try to say these are the 3 figures. If these are correct, most of the other figures should be correct. Okay. Factory cost should be this. Prime cost should be this. Material cost should be this. Lastly, profit and sales should be this. Okay. You can try to see whichever numbers I have encircled. Process costing was a super difficult question. I don't know has anybody got it correct or not, but normal cost or cost per unit should be coming to 150. You all can comment just now only those people who got 150. Then you'll have to be making abnormal loss account for containers and abnormal gain account for the oil part. And finally, in income statement, the final net profit will be 650 rupees. Now, this was slightly a strange question that you all are seeing right now. This was of a bank whereby there are gold loans and car loan applications. Some unusual data was there. And in end, you have to find out the salaries. The salaries in this case of the three professionals for gold loan will be 2,70,000. For car loan will be 3,60,000. If you want to be knowing how, you can directly go to the question by seeing the timelines below. Okay, I'm going to be solving every question in a proper way. Complete solving. Okay. Then the total cost of a car loan per loan will be 1037.5. Then there was a question on a company that trains for the air hostess. This is the cost of one batch. This is the minimum amount that you have to be charging. And these are the minimum trainees and the percentage that I wish to be having. Standard costing, simple question on material, labor and variable overhead variances. These are the material price and material usage variance. These are the two labor variances, and this is the one single variance of variable overhead cost variance. Okay. Now, this question was a replica of whatever is there in our book. Profit as per financial accounts was this, although not asked in the question. As per cost accounts was this, and your reconciliation should tally at this particular amount. Overheads, there was something strange in this question. Some part of the question is wrong because the final expense is coming as a negative figure. So if you have done everything correct, then ICAI's question is only wrong because the expense as a balancing figure is coming as a negative figure. Although when I try to scrutinize ICAI's mind, they might do something weird to arrive at a positive answer also. Then in that case, this could be one of your positive answers. Although I've written one note over here that I would like to be discussing when we reach that particular question. Further, now this question was on the ratios that we all have learned in standard costing. Although I have told in standard costing, this part is actually there in a module in budgetary control. Over here, 4 parts were asked. Actual hours worked are this. Then 7350 is actual output in standard hours. That is standard hours for actual output. Then standard capacity usage ratio was 70% and this ratio is 92.857%. Then CVP analysis. CVP analysis in this particular case, you have to just find out opportunity cost. Opportunity cost for this product was 1,05,000. That comes from here. For this product, it is 90,000. That comes from here. In 6A, you have to classify the expense based upon the functions, means it is related to production or admin or S&D and what is the behavior of it. So for consumable stores is a production expense, it is variable. General manager's salary, it is admin plus fixed. Delivery van expenses is a S&D expense but comprised of many expenses which are fixed or variable. So therefore, I've written semi-variable. Compensation, fixed salary plus commission on sales. Again, it will be a S&D expense because it is related to sales, and it will be a semi-variable because there is some fixed part, some variable part. And rent of finished goods warehouse is of course a distribution expense. You store the goods in the warehouse, so therefore you can distribute them wherever you all want. And then rent is there, no? It is always fixed in nature. Over here, the suitable incentive scheme will be a Rowan scheme. Okay. And then last question as such was a theory question. I would not like to much discuss it. One option was there. You can solve the theory question from activity-based costing. Other one was of budgetary control. Whichever chapter you all know, you all could have done that particular thing. Okay. So these are the final things. If you have some friend of yours who have given Jan 2026 attempt and you want that those guys check, then there is a timeline of each and everything. Send the timeline of this entire thing to your friend. Okay, chalo. So this part is all done. After this part, I will be starting to solve each and every question of MCQ as well as the subjective paper. Okay, let's start with that now. Chalo guys, so we'll start away with question number 1. This was of labor costing. To be very honest, this did not require any basics also of labor costing. Simply just some data is there, you will have to try to compute the answer. So let's start it off. A garment factory stitches each shirt through a single hand sewing machine operator. Okay, so therefore there is only one operator. The sewing time, there is one operator for one machine, for one shirt. Okay. The sewing time required to stitch each shirt is 15 minutes. 15 minutes, 15 upon 60 is 0.25 hours. The operator is paid at the rate of 65 rupees per hour. This data might not be of use to you. The factory works for 40 hours per week. Okay. And the production target is 480 dozens per week. Okay. So let's do one small thing over here. 480 dozens into 1 dozen is 12 shirts. 12. I guess this will be 5760. Okay. Acha. Do remember this. The factory works for 40 hours per week. Okay. It works for 40 hours per week. Okay. And you have to be making 5760. What are the number of hours and the number of operators required to meet the shirts target? And you have your 4 options over here. This is easy stuff. See. How many shirts you all need to be making? 5760 shirts per week. Okay. So, one shirt will be taking 0.25 hours. So, 5760 shirts will be taking how many hours over here? Just cross multiply. Okay. So, 5760 into 0.25. That is whatever I've written over here. 1440 hours will be needed. Okay. But try to think like this, that one operator will only be working for 40 hours per week. Okay. One operator will be working for only 40 hours per week. Now you require these many hours in all. So therefore 1440 divided by 40. So therefore you will be requiring 36 operators in all. That is 1440 divided by 40 hours per week. So therefore your 2 answers over here. 1440 hours will be needed and 36 operators will be needed. I guess that answer is over here. So therefore, your answer over here should be this particular answer. 1800 hours and 36 operators. That should have been your answer. You don't require any basics for this. This is common sense that we all have done. Okay, chali, this question is done. Now, question number 2, this was on material costing. Now, in fact, even if you would not have done your CA Inter, even if you all had done CA Foundation also, still this question you all would have solved only. Let's start it off. In a factory during month of October 2025, the following transactions have occurred in respect of purchase and issue of material A. Material A, stock on 1/1/2025. So, this will be, I think, the opening stock. This is the data for October, no? So, therefore, this must be your opening stock as such. 100 units at the rate of 50. And during the month, you purchase 2 more things. 2500 units at 55 per unit. And 600 units at 56 per unit. I guess all the things are given in chronological order only. Okay, that is the date order. Issues were on 15th of October, 1500 units. What is the value of material A consumed? They have not asked you what is the value of closing stock. They have asked you what is the value of material A consumed during the period using. This is important. LIFO method of pricing issue. So therefore, you have to be finding out the answer through LIFO method. And you all have your 4 options. I thought of, instead of explaining you in a normal way, I can make the SLC account and explain you. Although in exams, obviously, you just have to take the correct answer. But here, I'm trying to solve all the things. Okay. So, opening stock is written over here. Your SLC account is always date, receipts, issues, balance, quantity, rate, amount, everywhere. So, on October 1st, this is your opening stock, 100 units at the rate of 50 per unit. That is 5,000 rupees. Okay. And then you will have purchased this and then you will have purchased this 2,500 units at 55, 600 units at the rate of 56 per unit. Okay. Now see, I've written both those things in order over here. First of all, let's purchase 2,500 units. That comes to at the rate of 55. So therefore 137,500. Currently you'll be having 2 lots. This original lot that I have copied pasted over here. And then this new lot that I have put extra. Then one more purchases will happen over here. So therefore one more purchase 600 units at the rate of 56, 33,600. So now you'll be having 3 lots. That is these 2 lots that I have copied pasted over here. And then this extra lot that you all have purchased right now. So currently you all have 3 lots with you. Okay. These are the 3 lots that you all have. And finally, you all have issued 1500 units. Please do remember, if you all have issued 1500 units, then in that case, you are going to be following LIFO method. So last in, first out. You issue this first. So out of 1500 that you had to be issuing, okay, out of 1500 that you had to be issuing, you all have issued over here 600. Balance left is how much? 900. Okay, so therefore 900 units you issue. Okay, it is LIFO method. So first we issue out of this, remaining 900 will be issuing out of the lot of 2500 units at the rate of 55. Almost your answer is over. I don't require this part also, although I've still written just for your reference. But so 600 units at the rate of 56, 33,600. 900 at the rate of 55, 49,500. That's it. All your things are done. So 1500 units, the total consumption value will be 83,100. That is 33,600 plus this particular figure, that is 49,500. So therefore, 83,100 should be your answer. So therefore, this should be your answer as such. Okay. Again, easy question. Not necessary, in fact, that you all make a SLC account. Okay. You could have directly thought like that also, sir. If it is the LIFO method, then in that case, consumption will be happening out of the latest lot. So therefore, try to be thinking which are the latest lots. 600 will happen from here. Remaining in this case, 900 will be happening over here. So therefore, 600 into this plus 900 into this will be giving you all 83,100. That's it. Our job is over. This question is all done. Let's solve this question. Again, actually not from CVP analysis, but then I didn't know which chapter to put it. So therefore, I put it over here. Too easy a question here. The following information has been given regarding the two machines of a manufacturing department of X Limited for the month of September 2025. Okay. Spare part cost. Machine A, 40,000. Machine B, 60,000. The total cost for your spare parts is going to be 1 lakh rupees. Further estimates for the month of October 2025. There is an increase of 15% in the price of the spare parts for both the machines. Okay. See, this is total spare part cost currently for the month of September. Okay. But for the October month, these spare parts you must be purchasing from outside. Whenever you'll be purchasing from outside, now for October, there will be 15% increase in the spare parts of both the machines. So therefore, either you add 15% or multiply by 1.15. Okay. For both the machines, the spare parts now will be more expensive, 15% more expensive. There is an increase in 25% in the consumption of spare parts for machine B. Okay. Those guys are saying number of spare parts that we will be requiring now for machine B will be far more. We'll be requiring 25% more. So again, this particular thing will increase by 25%. Either you add 25% or multiply by 125%. 125% is 1.25 now. Okay. That's it. You compute this 40,000 into 1.15. I guess this will be 46,000. And 60,000, you're going to be multiplying by 1.15 and 1.25. I've written the answer over here, 86,250. Just join both of them. This figure plus this figure will be your total spare part cost for the month of October. Okay. So 46,000 plus 86,250 will be 132,250. So this should be your correct answer. Till now, honestly, all the three questions were simple. You should have got the first 6 marks over here. Those people who have got the first 6 marks, at this time, you all can comment, sir, we got it. So this thing is done. Question number 4 of standard costing. Slightly on missing figures, okay, but too simple as such. Company wage budget for the last month was based on standard production time of 30 minutes per unit. Beta 30 minutes per unit is half an hour, no? So 0.5 hours. I'll write down in terms of hours. And standard wage rate of rupees 50 per hour. So therefore, this is the standard rate per hour. During the last month, it produced 30,000 units. Let me just remind you. This question, till now I try to be thinking, it is on labor variances. Labor variances are dependent upon what factor? They are dependent upon output. So therefore, output was 30,000. The labor rate variance was 7,500 adverse. Okay, so labor rate variance was 7,500 adverse. And the labor efficiency variance was nil. Okay. Labor efficiency variance was nil and labor rate variance was this much. What is the actual wage rate per unit during the last month? Okay. And these are the 4 options which are there. Now, first of all, we always try to be making the format in this manner. You all always make revised standard for actual output. Actual output was how much, beta? Actual output was 30,000 units. So therefore, for 30,000 units, how many hours you should have taken? What was the rate that you should have paid? What should have been the labor cost? And in reality, what was the data for 30,000 units? Now, in this question, you already have the standard data with you. See, revised standard will be for 30,000 units because actual output is 30,000 units. For 1 unit, half an hour is needed. So for 30,000, how many hours will be needed? 15,000. To be paid at standard wage rate of 50 per hour. So therefore, 7,50,000. Okay. Now, they have asked you, what is the actual wage rate? So therefore, you require this particular data. This is the information that you need. You get the marks for this. Okay. So then what to do? See, what data you all have? Labor rate variance was 7,500 adverse. How do you compute labor rate variance? Labor rate variance is standard rate minus actual rate, which you have to find out, into actual hours. But beta, actual hours also you don't have. So out of 3 things, 2 things are missing here. So you cannot be solving. Forget this. You have some other data. No, try to be using that data. Okay. So what other data we have? See this. Labor efficiency variance was nil. Labor efficiency variance was nil. I've still made a proper working note below, but common sense. These are the MCQs here. How do you compute labor efficiency variance? How many hours you should have taken minus how many hours that you took into the standard rate. If this variance is nil, that means whatever hours should have been taken, but the actual hours also. So therefore, this figure will also be 15,000. Why? Because labor efficiency variance was nil. So therefore, how many hours they had to be taking? They'll be taking the same number of hours. Okay. So this figure is 15,000. Now you come back to labor rate variance for 7,500 adverse. So therefore, labor rate variance. How do you compute it? What should have been the standard rate minus what was the actual rate into actual hours. So labor rate variance was 7,500 adverse. Standard rate should have been 50. Actual rate you have to find out into actual hours, that is 15,000. Take 15,000 to this side. So 0.5 adverse is equal to 50 minus actual rate. Now tell me one thing. Variance was adverse. That means workers were paid at a higher rate, no? So therefore, actual rate will be 0.5 more. So therefore, actual rate will be 50.50. Answer should have been 50.50. This should have been the correct answer. Okay. That's it. Easy question. I have just tried to make the working notes in a proper way. Although in exams, again, I'm saying not needed because these are MCQ. So therefore, you don't require those things. But as I told right in the beginning that I have to try to teach complete. I'm not trying to discuss answers with you that I've discussed right in the beginning only. Whatever are the final answers, I'm trying to give you all complete solution of each and every question. Okay, chale, done. Chale guys, this is question number 5 now. Now, in question number 5, it's a question on job costing. I've solved it in my way. Any other way which gives you the same answer is all proper. There is no way to be solving here, to be honest. Whatever strikes you all first. So let's start it off. T Limited, a textile manufacturing company, recovers factory overheads on a fixed percentage basis on direct wages. So, factory overheads is recovered as a percentage of direct wages. So, therefore, it's percentage of labor cost method. And admin overheads at the rate of 25% off. We do remember 25% on factory costs. So, therefore, there is factory overheads. There is administration overheads also. One is percentage of wages, other is percentage of factory cost. Okay. The company has furnished the following data for job 201. Okay. What is the data? Direct material, direct wages, directly sales is given to you. Profit is 25% on total cost. Okay. What is the percentage recovery rate? Recovery rate means absorption rate. For factory overheads for job 201. Okay. So they want absorption rate for factory overheads. Okay. See, for admin, those guys have given to you, know, it is 25% on factory cost. They want what is the rate of factory overheads as a percentage of wages. So what I'll try to be doing. Do you have wages with you? Of course, yes, sir. That is 45,000. So therefore, what is the other thing that you all want? Factory overheads. Get your factory overheads. Factory overheads upon wages will be giving you all the answer. So then what to do? Start to be making cost sheet. Try to be thinking. You all have most of the things, no, with you. Can I write down few things, beta? See. Direct material is 56,350. Direct wages is 45,000. If I add, I'm just trying to be saving some space over here. So 56,350 plus 45,000. So therefore, it will be 101,350. Okay, 101,350. add factory overheads. Now factory overheads, I don't know, it'll be some percentage of wages. Okay, fine. Then in that case you will be start to be arriving at factory cost. Okay, then you will be adding your admin overheads over here. Admin overheads will be 25% on factory cost, but you don't have factory cost with you, so let's leave it just for some time. This will be giving you all total cost. Total cost add profit will be giving you all sales. Chalo, one small thing, do you have sales with you? Yes, I have sales of 1,90,000. I have that particular figure with you. Profit is 25% on cost. So therefore what I am saying, if this is 25, this is 100, no? Cost is 100. So therefore this figure will be 125. Please cross multiply. Or you all can directly say also, if profit is 1/4 of cost, it will become 1/5 of sales. Whatever you all understand. Okay. So just do this thing. Just do this cross multiplication. 38,000. Subtract, this will become 1,52,000. So total cost is 1,52,000. Okay. I'm rubbing out this part now. I don't need it. Okay. So till now, this is your status. Okay. This is your status as such. Okay. Now see. I want to be finding out factory overheads as a balancing figure. Let factory overheads be chalo represented by letter F over here. Okay. Can we say factory cost will be 101,350 plus your factory overheads? So plus F. Now admin overheads is 25% on factory cost. So take this figure, it's 25%. So 101,350 into 25% will be giving you all 25,337.5. I have calculated few of the figures down, so therefore I am trying to be seeing that. So 25% of this plus 25% of this, no? So therefore plus 0.25. Okay. The moment I do that, my job is altogether over. How it is over? This figure plus this figure should be giving you all this figure. So therefore equation comes like this. 101,350 plus F. That is this particular data plus this data 25,337.5 plus 0.25f. This should be equal to total cost 1,52,000. Just the moment I write down this, you all can start to be solving if you all want. Okay. So add up this and this. Once you all do that particular thing, you will be arriving at some number over here. Add this plus this. This will be 1.25f is equal to 1,52,000. Okay. So shift this number over here, 1.25f will be equal to that. Okay. And finally, in this particular case, f will be equal to 20,000. F will be equal to 20,250. So therefore, factory overheads over here, we got the value of f. Now our job is done. So therefore, 20,250. Now, factory overheads is recovered as a percentage of wages. Wages was how much beta? 45,000. So therefore, 20,250 divided by 45,000 into 100. The moment you all do that, you will be arriving at your final answer. So therefore, 20,250 upon 45,000 will be nothing but 45%. So therefore, over here, answer will be 45% over here. This should be your correct answer. Okay. Just that it has to strike you. You have to find out factory overheads as a percentage of wages. So therefore, try to get factory overheads as a balancing figure. Take that figure as X, F, whatever you all want. Make the cost sheet and try to solve for the equation. Get your answer, get the percentage. If you would have applied your mind till now, I don't think so getting 8 marks, getting 10 marks is a problem till now. In fact, the standard costing question also I think was quite simple. So 10 marks should have been there in your pocket in the first 10 to 15 minutes. Okay, chali, this thing is over. Time for the case study to start. Chale guys, question number 6 to 10. Case scenario. Now this question is exact replica of the question that we all have done in class. Exact replica. Numbers are different of course. Okay, but rest of the things are very simple. Okay, let's start to be doing that. Listen. Z Manufacturing Limited produces 3 different types of specialized products, namely X, Y, and Z. The following information has been collected from their books of accounts for the year ended 31st of March 2025. So they make 3 products X, Y, and Z. Existing situation, particulars X, Y, Z. Sales 40 lakhs, 23.8 lakhs, and 16 lakh 20. Let me just try to add them up. 23 lakh 80. plus 16 lakh 20 plus 40 lakhs. So therefore this will be 80 lakhs. Further, selling price per unit. Okay. See, if you'll be dividing sales by selling price, you'll get the information of number of units. Okay. I would be computing that after some time. Variable cost per unit. Okay. If you take that number of units that you'll be getting by this upon this and multiply by variable cost per unit, you will be able to arrive at total variable cost. Okay. Fixed cost, of course, is of the company, that is 18 lakh rupees. So try to be thinking you will have total sales, you will have total variable cost, subtract, you will be arriving at contribution, less your fixed cost, you will be able to arrive at the profit of the entire company. Now, Z Manufacturing is currently discussing proposals to maintain sales mix ratio to discontinue product Z and replace it with a new product Y in anticipation of the following results. Okay. Particulars XY, see, instead of X no, sorry, instead of Z no, W has started to come now. So it's not XYZ anymore, it's XY and W. Sales mix ratio. Sales mix ratio means whenever 100 rupees of sales will be done, 55 rupees will be of X, 30 rupees will be of Y, and remaining 15 will be of W. Selling price per unit, variable cost per unit, total fixed cost has changed. It was 18 lakhs before, it will become 18 lakh 80. Total sales was 80 lakhs before, now will become 85 lakhs over here. Okay, so therefore this will be your total sales now. Based on the above information, you are required to calculate for MCQ 6 to 10. Okay, what information? What is the new contribution to sales ratio? Contribution to sales ratio means PV ratio. Okay. In the proposed situation, proposed means X, Y and W. Okay. What is the break-even sales? Okay, at the level of proposed sales mix. Proposed sales mix, of course, means X, Y and W. Those guys have clarified also over here. What is the total profit at level of proposed sales mix? Proposed, those guys have clarified also, X, Y and W. What is the combined contribution to sales ratio at the existing sales? Existing sales means X, Y, Z. They want contribution to sales ratio, means those guys want PV ratio. Okay. What is the total profit at the existing level? Existing level means X, Y and Z. Okay. See, what did I do? I'll tell you all in a simple way. I just made an income statement. Sales minus variable cost will give you contribution. Less fixed cost will be giving you all profit. Then if you all want, you all can compute the PV ratio. You all can compute break-even sales also. Okay. I've done that thing twice. Let me discuss that thing for product XYZ first. See, for product XYZ in the beginning, you all had sales and you all had your selling price. Okay. You all had sales and you all had your selling price. Divide it, you will get number of units. You all had your variable cost per unit. So number of units into variable cost per unit will be giving you all total variable cost. Okay. Sales less variable cost will be giving you all contribution. I totaled all of them over here. I totaled this also, totaled this also. Okay. Less fixed cost, currently it was 18 lakh rupees. Okay. Profit in this case, so 36 lakhs of contribution minus 18 lakhs of fixed cost will be giving you all profit, that is 18 lakhs. Okay. Now, just something extra in any case I'm trying to be doing, although one of them might not be needed, but one of them will be needed. PV ratio. PV ratio is contribution upon sales into 100. So therefore 36 lakhs divided by 80 lakhs percentage. So therefore 45%. And then in case somebody says, sir, let's find out break-even sales. No, okay, find out break-even sales. Break-even sales is fixed cost divided by PV ratio. Fixed cost is 18 lakhs divided by 45% will be giving you all 40 lakhs. Exactly the same thing we are going to be doing for XYW also, but one extra step. And what is that extra step? See, over there, total sales that will be there will be 85 lakhs. Multiply it by 55%, 30% and 15%. You will be able to get the breakup of this. So therefore, this is the breakup, this is the breakup, this is the breakup. Divide by the selling prices that were there, you will get this. Once you get this, multiply by variable cost per unit, you will be getting this. Sales minus variable cost will be giving you all contribution. You will be reaching till here. Subtract your new fixed cost 18 lakh 80, you will be able to arrive at profit over here. Okay. Again, find out your PV ratio, contribution divided by sales into 100. So therefore that will be giving you all 47%. Okay. And then last thing over here, find out break-even sales. Break-even sales will be fixed cost divided by your PV ratio. So 18,80,000 divided by 47% will be giving you all 40 lakhs. Coincidentally, break-even sales over here and break-even sales over here has come same. Coincidentally. Okay. That's it. Our job over here is completely over. Nothing else is to be done. This will help us to answer all the questions. Okay, now let me just see the questions. What is the new PV ratio? New PV ratio should be 47%. This figure. So 47%. Okay. Then, what is the break-even sales at the at the level of proposed sales mix? It is 40 lakh rupees. What is the total profit at the proposed sales level? Profit is over here now, proposed. 21,15,000. 21,15,000. Okay, further. What is the combined contribution to sales ratio at the existing level? I guess that was 45%. So therefore 45%. Further, what is the total profit at the existing level? Existing level was 18 lakhs. So therefore 18 lakhs should be your answer. Okay. This is easy stuff. Okay. There is nothing much in this entire question. Just that it has to strike you. You have to be making an income statement like this. Okay. To get all the data. Okay. That's it. I hope that you got 10 marks over here. At least our students who all have done all the classwork section questions also should have got everything by now. Okay. Chale, this is done. Chale guys, so finally a question now of material costing. This is one chapter that always comes. I have told that thing a number of times. So let's start it off. This is basically all on your EOQs, all on the number of orders. Now let me tell you all the formula of EOQ first before you all try to think further. Square root of 2ACA upon CI. These are the symbols that I use. So let me just try to define them for you. A stands for number of units of raw materials to be purchased in 1 year. CA stands for your ordering cost. CI is nothing but your carrying cost. Now CI usually includes the interest cost but can include the other costs if given to you in the question. Okay, like the storage cost up and so on. Okay, so let's start it off. Case scenario number 2. Spice Guard Limited manufactures pepper spray that is used by women for their self-defense. Okay, you might have seen girls using the pepper spray spraying in the eyes of the guys. Although it is used by wives a lot to spray it in the eyes of the husband also, but that is a different story. As per the estimates, there will be an average quarterly total market demand of 3125 units of pepper spray. So please do remember, pepper spray is not their raw material, that is their product. There is a demand of 3125 units of pepper spray. That is a quarterly demand. So let's multiply by 4. Yearly demand will be 12,500 units. Spice Guards is expected to have 8% market share of the total market demand of pepper spray. Please do remember that. This is the total market demand. Total market means all the competitors together. Okay, this is the demand for this product in the entire market from all the consumers. Out of that, I am one of the suppliers of this product. And my share is how much percent? 8%. So therefore, into 8%. So therefore, I am going to be supplying these many units of spray. Okay. This will be the final thing that I will be supplying. Rest will be supplied by the other manufacturers. Okay. So the product that I make, total market demand. Market means the market of sprays like this. Okay. Is 12,500 units. Out of that, 8% is my share. So therefore, I sell approximately 1,000 sprays. The company produces the pepper spray using 2 raw materials, OC and OE. Okay. Each unit of pepper spray requires 4 kgs of OC and 1.6 kgs of OE. Now let me get some data for you. 1,000 sprays you will be making. Each unit of pepper spray will require 4 kgs. So 1,000 into 4, 4,000 kgs. 1,000 into 1.6. So therefore 1,600 kgs. Okay. So this is the raw material that I will be needing as such. Okay, further. Ordering cost per order. Okay. Ordering cost per order is represented as CA for us. Okay. OC and OE. Further. Storage rate 5% per annum. Okay. Storage rate. Storage cost is part of your interest cost, part of your CI. Interest rate in this case is 13% per annum. So therefore, this is again CI only. Obsolescence rate, stock becomes old. This is also part of your CI only. In fact, there was a question like this, very similar. I have told in the class also. Do your homework section a proper way. This question is replica of that if you all will be searching your homework section. Although we all have done questions like this in class also, but exact replica you will be getting in our homework section. Okay. Raw material price, this is nothing but CPU. Okay, further, based on the above, you are required to calculate. You are required to answer the following MCQ 11 to 15. Okay, just before I will be computing that, see, 5% per annum, 13% per annum, 2% per annum. So therefore, this will become 20% per annum. 20% per annum will be your final rate of interest. Okay, that includes all the other things also. Further, please do remember your CI is nothing but carrying cost per unit per annum. In this case, per unit means per kg, I guess. Okay, because raw material is measured in kg. So therefore, per kg per annum. Okay. Now, in this case, listen. Ordering cost over here is also given to you. Storage rate 2.5, it is rupees only, not in percentage. 2.5 per kg per month. I should be multiplying by 12. So therefore, this will give you directly rupees 30 per kg. Okay. 1.25 per quarter. Okay. So multiply by 4, it will become 5% per annum. Okay. Now, this data I'll have to try to simplify for you in some time. Can I do that over here without looking at the answer? Okay, see, I'll try to push this thing below. Okay, so therefore I can directly compute some things for you first. Okay, trying to be making this data simple. See, you all have two types of raw material, OC, you all have OE. Okay. First of all, A is number of units of raw materials needed in the entire year. That is 4,000 and 1,600. 4,000 and 1,600. Okay, first. Second, CA. CA is ordering cost 3,125 and 500. Okay, further. CI. CI is CPU into I. Okay, C. CPU is 2,000. Okay, CPU is 2,000 into 20%. So therefore, it will be rupees 400 per kg per annum. Okay, remember this. That is CPU 2000 into I is sum of all these things. Over here, CI will be not tricky, but like, try to be thinking. For storage cost, it is directly rupees 30. Okay. But over here, it is given in percentage. Obviously, it has to be applied to your CPU only. So therefore, 200 into 5%. Just a sec. 200 into 5% is rupees 10. So therefore, 30 plus 10, that is rupees 40. Okay. This is ACA CI. Can I compute EOQ for you all? Just like that only. So in case it is required, we all know. EOQ is square root of 2ACA upon CI. Okay. So 2 into 4,000 into 3,125 divided by 400 square root. So therefore 250 kgs. Over here 1,600 into 2 into 500 divided by 40 square root. It is 200 kgs. Just for time pass, I am computing number of orders also. See. This is our annual requirement. We order 250 kgs at one time. EOQ has that particular meaning only. Okay, that is how many units of raw materials. How many units of raw material you order at one time. So therefore, I require this much. I order this much at one time. So 4,000 divided by 250. So therefore, number of orders will be 16. Over there, it will be 1600 divided by 200. So therefore, number of orders is going to be 8 orders. Okay. I just wanted to compute some data to initially before I started off with the MCQs. Okay. Now let's start to see whatever are the MCQs. What is the EOQ in kgs for raw material OC? Okay. And the number of orders. I have already calculated that 250 and 16. So therefore 250 kgs and 16. Further. What is, just a sec, I'll drag the things below. What is the total annual cost of raw material? Total annual cost, okay, of raw material OC at EOQ quantity level. They want total annual cost of raw material. So, the options over here, 81.2 lakhs, 80 lakhs, 81 lakhs and 80.40 lakhs. Okay, so let's start to be finding out T. Obviously, we are trying to find out T at EOQ, no? So, therefore, T at EOQ, its formula is root of 2 ACA upon CI. Or if you all want, you all can find out TCA separately, TCI separately and add them. Answer will be same only. So, therefore, 2 into 4,000 into 3125 into 400 square root. So, therefore, this will be rupees 1 lakh. Now, this should have been your answer, but I don't think so. This is any one of the 4 options. So, sir, then where have you gone wrong? Then I try to be thinking, over here they must have asked you total annual cost. Total annual cost will mean including purchase cost. So, therefore, let's add purchase cost for the entire year. Purchase cost for the entire year. How many units will be purchasing for the entire year? 4,000. 4,000, every unit will be purchasing at 2,000 rupees. So, therefore, that will amount to 80 lakh rupees. So, therefore, this answer will be 81 lakh. So 81 lakh should be your answer. 81 lakh is your answer. This should be your answer as such. Okay, further. This is question number 12. Question number 13. What is the total annual cost of OC if the company proposes to keep order size of 200 kgs of OC per order? See, EOQ is the best option. So therefore, given a choice, we should order how many kgs at one time? 200. But company has a policy. Let's order only 200 kgs at one time. Obviously, your cost is going to be rising only. Currently, your cost was 81 lakhs. Now, answer has to be higher than this. Okay. But higher than this, no. You all have, this cannot be your answer. This cannot be your answer. Okay. Out of these two, one of them will become your answer. Sir, which one will become your answer? We'll just check it up. Okay. So, in that case, you cannot apply that formula, square root of 2 ACACI, because that formula only applies for T whenever you order at EOQ. Now, we are not ordering the EOQ. EOQ is 250. We are ordering 200 kgs here. So, therefore, separately find out TCA. Separately find out TCI. Get your answer. TCA is A by Q into CA. TCI is Q by 2 into CI. And I guess we got to be adding purchase cost also. Purchase cost will be A into CPU. You will be purchasing 4,000 kgs at one time at 2,000 rupees. So, therefore, this will be 80 lakh rupees. The same answer as before. But let's start to be computing A by Q into CA. So, A is 4,000. Now, you are going to be ordering 200 kgs at one time into CA. CA is 3125. 3125. So, 4,000 divided by 200 into 3125. So, therefore, this will be 62,500. TCI is Q by 2. Q by 2 in this case is 200 upon 2 into CI. CI we had written over here, no? CI was 400. CI was 400. So, therefore, 100 into 400. This is 40,000 plus 62,500 plus 80 lakhs. So, it will be 8102500. This should be your answer as such. Okay, this should be your answer. 8102500. Just let me check it up over here. Is this your answer or not? Yes. 8102500. The presentation all depends upon you, beta. I cannot give you a rule for presentation or something. Okay, but this is whatever is going to be your final answer over here. Okay. Chali. Just a sec. If some part has got hidden over here. So this should be your answer. Okay, chal. So this work is altogether done. Then question number 14. Question number 14 in this case. What is the annual requirement of raw material OC and OE? That is annual demand of raw material OC and OE means A. I calculated A, no, for you all. 4,000 and 1,600. 4,000 and 1,600. That should be your answer. Okay, this should be your answer. Then the next one. What is EOQ for OE required by Spice Guards? So EOQ I calculated for you all over here. For OE, that is nothing but 200 kgs. Answer in this case should be 200 kgs. EOQ I have calculated by that formula over here, 200 kgs. So 200 kgs will be your answer. Okay. Your MCQs part 1 is all done with this. Now this again my thought might not have happened with you all. But this time MCQs that were there were the easiest as compared to from the time the new course has started. Okay, that might not be the trend going further. I don't know why. But this time paper as such was very simple. There might be some strong reason of institute, okay, or just a good luck for all the people. But these MCQs are way too simple as compared to whatever you all are capable of solving. Okay, chali. Then in our next part, we'll be starting away with part 2. Those are the subjective type questions. Okay. Chale guys, so we'll start away with question number 1A. Actually, I don't know this is from which chapter. So therefore, just because some logical things were needed, I have called that thing as chapter of CBP analysis. Okay, in any case, this is neither absorption costing nor marginal costing. Simple common sense question. Let's do this. ABC Limited manufactures 4 products A, B, C and D in the same factory. The following information is given for a certain period. Input materials 600, 400, 400 and D is 200. So we manufacture 4 products. We input this much amount of materials. Average yield is 80%. So you all can multiply. So how much output will come out beta? 480. That is 600 into 80%. Then 400 into 90% is 360. Then 400 into 96%, this is 384. And lastly, this will be 144. Okay. The total finished goods packing cost is 4,600. We are actually concerned about this particular cost only. Okay, further. Other information. All the products are packed in boxes, which has a capacity of 24 units. Now see, these 480 units will be packed in box. One box will be having 24 units of product A. Okay, so try to be thinking 480 divided by 24. How many boxes will be needed? 20. 360 divided by 24. So therefore 360 divided by 24. 15 boxes will be needed. 384 divided by 24. So I guess 16 boxes will be needed. And 144 divided by 24. I guess 6 boxes will be needed. Okay. All the products are packed in boxes which has capacity of 24 units. Done. Product A and B are packed in larger boxes. Okay, so these two are packed in larger boxes. Whereas C and D are packed in smaller boxes, which cost half price as compared to the price of a bigger box. So these two will be packed in smaller boxes and the cost of a smaller box is half of the larger box. Each box contains only one type of product. There is no product mix-up in packaging. Okay, you are required to find out how many large boxes and how many small boxes are used. Okay, so these many large boxes and these many small boxes are used. That's it. Okay. Find out the cost per large box and per small box. Okay. Allocate the packaging cost among the 4 products for the 4 finished goods. Okay. See, the total cost is 4,600, no? This is obviously of the larger boxes and of the smaller boxes. Let the cost per small box be X. So it is X over here, X over here. Let the cost per large boxes be 2X, no? That is double of the small box cost. So if we try to be thinking, this is number of boxes, this is the cost per box, no? So therefore, this will be 40x total cost. This will be 30x boxes cost. This will be 16x. This will be 6x. This is the total packaging cost. And this cost has to be equal to your total boxes cost. That is nothing but 4,600. I must have exactly done this particular thing below. Just check it up, please. So input materials multiply by the average yield. This will be giving you all output. Once you get that output, divide by 24. This will give you number of boxes into the cost per box. 2x, 2x, x and x. So 40x, 30x, 16x, 16x. Total becomes 92x. But total 92x has to be equal to 4,600. So find out x. So 4,600 upon 92, that will be 50 rupees. That is the cost of a smaller box. And cost of the larger box in this case will be double of that. That is 100. Okay, that's it. This is your, I guess, part 1. How many boxes were used? Find out the cost per large box and small box. So therefore, this is 50. This figure is 100. Allocate the packaging cost among the 4 products. It's very simple, beta. This is the number of boxes, no? Okay, these are the number of boxes. Multiply by 100 over here. Multiply by 50 over here. You will allocate the cost. That is exactly whatever I have done over here. Number of boxes into the cost per box. Okay, obviously you will get the breakup of 4,600. That is whatever those guys want also. Okay, ICAI has not given separate markings for the 5 marks. As per me, whatever I think, this will be for 2 marks, this will be for 2 marks, this will be for 1 mark. I think so, although I cannot guarantee. I have not made the paper. But based upon this, you can try to be seeing how many marks you are going to be getting. You all can put that thing in the comments below, how many marks you will be getting for this. Okay, chalo. This question number 1A, easy one, is quite done. Chalo guys, so we'll start away with question number 1B. This was on joint products and byproducts. Okay, almost our last question that we all have done in class was like this. Although in that problem, there was one joint product, one byproduct. In this question, there were 2 joint products and 1 byproduct. Okay, but almost similar, except if there is only 1 joint product and byproduct is treated as scrap, there will be no division of joint cost. In this question, there will be division of joint cost also, but we all have done many questions like that also, especially in your test if you all remember. Let's do the things. Eco Cotton Limited manufactures 2 joint products, cotton fiber and cotton seed, and a byproduct, cotton linters. It should be, okay, cotton linters or cotton liners, I don't know, by processing raw cotton. Okay, so this thing is your byproduct. Okay, if it is your byproduct can either be treated as joint product or as scrap. Now, how it will be treated, that question will only tell you. So let's continue. The joint processing cost are 146, 100. This is your joint cost. Joint products can be further processed and sold at a higher market price with some sales promotional efforts, whereas byproduct can only be sold after further processing. So joint products, this and this, can be either sold at split off point or can be processed further. But cotton linter, that byproduct of theirs, will only be sold after processing. Okay. The relevant details of the 3 products are as follows. Output, okay. Selling price at split off point, fine. Further processing cost, you are processing further all the 3 products, no? So therefore, further processing cost, further marketing cost, okay. And then of course, product will be sold at a higher price. So this has to be more than this. This has to be more than this. That's why they are processing it further to get a higher price. You are required to show how joint cost would be apportioned between cotton fiber and cotton seeds using sales value at split off point. So which method you have to be using? Sales value at split off point. After crediting the net realizable value of the byproduct cotton linters. Okay. Now this line will only tell you that whether the byproduct is treated as a joint product or as a scrap. If the sale value of byproduct is reduced from joint cost, that itself means that this thing will be treated as scrap, no? This was one thing that you have to notice yourself by reading the question. Okay, as I told, question only tells you, whether the byproduct will be treated as joint product or scrap. It has given you. Determine the total profit or loss if the joint products are sold without further processing. Okay. So if they are sold as it is, then in that case, what will be the total profit or loss? They have asked you total profit and loss, not per product. They have not asked you product wise. Third one. Which of the joint products can be processed further for maximizing profits if using incremental analysis of profits? Okay, that's how we all try to be doing. This is the part of depth of processing. Okay, which product should be processed further, which not. Chalo, we'll start away with the first part. Show how joint cost would be apportioned. Joint cost is 146, 100. Okay. So you have to apportion this. No, you don't have to be apportioning this. You have to apportioning net joint cost. That is whatever is told over here. After crediting, joint cost is debit. So credit means you will deduct it, no? So from here you deduct net realizable value of the byproduct. Okay, see. Byproduct you are going to be having 300 units of output. Okay. It can be sold for what price? 10. But 10 is after incurring two costs, 2 rupee and 1 rupee. So therefore, how much net do you get in your pocket, beta? 10, but then you have incurred 2 and 1 rupee, no, for it. So therefore, you get 7 rupees. So therefore, 300 into 7, this much will reduce your cost. So therefore, your joint cost will get reduced by 2,100 rupees. So 146, 100 minus 2100, 1,44,000. So therefore, you have to apportion 1,44,000 rupees of cost. That is whatever is your objective. Okay. Reduce 1,44,000 over here. Means apportion 1,44,000. And how you have to apportion, that thing is given to you over here. Sales value at split off point. Sir, how does this particular method work? It is very simple. Sales value at split off point. No, this is the output. Okay. Please only apportion joint cost among the joint products because byproduct in this question is treated as scrap. Okay. So therefore, output over here multiplied by selling price at split off point. Sir, why that? Because we are following that method only, selling price at split off point. So this into this, whatever comes, this into this, whatever comes, I'll give you sales value of output. Divide 1,44,000 in that ratio only. That is whatever precisely I've done over here. See, calculation of net joint cost, I explained you all, 1,44,000. Then further in this case, apportionment of net joint cost. Your two joint products over here. Output multiplied by selling price as split off point. This will give you sales value of output. And then divide your joint cost of 1,44,000 in this particular ratio. That's it. Once you all do that, this will be your answer. This will be your answer. Your job gets finished with that particular thing only. Okay. With that, part 1 is completely done. Apportionment of net joint cost. Now, this question again was asked for 5 marks. I don't know the breakup, but I try to be thinking. This will be asked for 2 marks. This will be asked for 1 mark. This will be asked for 2 marks. That is my analysis. It could be different also. Second, find out total profit or loss if joint products are sold without further processing. See, if products are sold without further processing, you will sell this much, you will sell at this particular price, you will get this much amount of sales. That is why this amount of sales I recorded. From there, you subtract your cost. Please do remember, do not talk of this cost and this cost because they will be incurred after the split off point. So therefore, sales minus cost as above, this will be giving you a net profit. So therefore, your net profit will be 2,16,000. Now, some people could have done some time pass. Your marks will not get reduced by that. Okay, but that was simply a time pass. Some people can be making this entire thing like a cost sheet format also, product wise also. Ultimately, this should have been your answer. You will get marks because of this particular answer. Okay, then third one. Which of the joint products can be processed further for maximizing the profits using incremental analysis of profit? Okay, this is simply depth of processing beta. Which product should be processed further, which should not be? Obviously, they are only talking of joint products, that is this and this, because this has to be processed further and sold. There is no option of selling it off at split off point. Okay, so what to do? Simple. If you process further and sell, you get this much amount of selling price. If you would have sold like that only, you would have got this much amount of selling price. So subtract, that is extra revenue. So like over here, 110 minus 90, that will give you 20. This minus this, that will give you 7 rupees. Okay. To get this 20, how much are you incurring extra? 14, that is 9 and 5. For incurring 7, for earning extra 7, how much are you incurring extra 8? So therefore, if you process further, you are getting a profit of 6 rupees. If you process further, you are incurring a loss of rupee 1. So as you are getting higher profit, process this further. As you are having loss, do not process cotton seed further. I have done the things on per unit basis. You could have done the things on total basis also. This thing you can multiply by 2800. 1 rupee loss you can be multiplying by 1800 also. That will give you total profit or loss. Okay, in case you wish to be doing that. I have done exactly the same calculations over here. Extra revenue minus extra cost will give you extra profit or loss. If there is profit, process further. If there is loss, sell it off at split off point. Okay. That's it about this question. You all can comment how many marks you will be getting over here. Okay. Now, usually there are stepwise marks, but please note that it is not necessary that ICAI has to give you stepwise marks. Or why it is not? Because there is 5 marks for this one single question. I think ICAI is getting into that mode whereby they want to be keeping this kind of a right with themselves, how many marks for every question. That is why those guys are not giving you the breakup of this particular thing. That's what is my analysis. Rest of course depends upon the institute. Chali, this question is altogether done. Okay question, not a tough question as such, but might not be too simple for some students. Okay, chali, done. Chali guys, we'll start away with question number 1. See, this was on labor costing, simple, straightforward question on Halsey-Rowan, bonus question for you. Worker of MS ABC Manufacturing Limited was assigned the job 101. He began the job on 1st of June at 9 a.m. and completed the job at 12 p.m. Okay, there are 9 working hours in a day from 9 a.m. onwards. Okay. Work done and approved 1800 units. Okay. Other information per hour, standard quantity per hour. So therefore, you should be making 45 minutes in 1 hour. Wage rate 150 rupees per hour. Bonus as per Halsey plan 50% of time saved. You are required to calculate remuneration of worker X on the basis of Halsey plan and Rowan plan. Okay, now Halsey and Rowan base are calculated based upon basically 4 kind of informations: time allowed, time taken, time saved. Then basic wage rate per hour. Once you have that, then it is only calculation, nothing else to be doing. Okay, so let's do the first thing, time allowed. Time allowed means time allowed for actual output. Actual output was how much? 1800 units. 1800 units should have taken how many hours? In 1 hour, you should be making 45 minutes. So therefore, you should have taken 40 hours to make 1800 units. How many hours did you take? You started the work on this date at this time. You finished the work on this date at this much time. Count, no? There are 9 hours in a day. First, second and third, 9 hours. The last day, 9 a.m. to 12 p.m., 3 hours. So 27 plus 3, I've written that thing over here. Okay, so therefore 30 hours over here. So 40 hours was time allowed. 30 hours was time taken. Okay, you all can subtract. Time saved will be nothing but 10 rupees per hour. After that, basic wage rate is 150 rupees per hour. Now it is too simple here as such. So therefore, first of all, compute basic wages. Basic wages will be paid based upon time taken. 30 into rupees 150, 4,500. That is one thing. 4,500. These are your basic wages. Now apply your formula of Halsey and Rowan. Halsey says whatever is the time saved, 50% of that into basic wages will be your bonus. Therefore, 50% of time saved into basic wage rate per hour. So therefore, that will be coming to 750. 4,500 plus 750. So therefore, total wages as per Halsey will be 5250. Apart from that, total wages as per Rowan. For that, you will still need bonus. What does Rowan scheme say? It says that Rowan says that bonus will be time saved, that is this particular figure, divided by time allowed. So 10 divided by 40 into basic wages. Basic wages are 4,500. So therefore, it will be nothing but 1125. So 4,500 of basic wages, 1125 rupees of bonus. You add up both these particular things, that will give you the total wages, that is 5625. I think so you should have got 2 marks for this. and 2 marks for this. Okay, and that will end up this entire question. Simple question it is, just basic fundas of Halsey and Rowan. Okay, chalo, all together done. Chalo guys, we'll start away with question number 2A. This is all on cost sheet. Now, this was not a regular question on cost sheet, slightly different as compared to a regular question whereby you just have to try to classify. Hereby you had to be doing the classification also, plus in this case you had to value the stock also. That in any case we were doing, I guess, since the first question of cost sheet only. So this is kind of your cost sheet, advanced cost sheet, all mixed together. Let's do this. Dhol Makers Limited sold 6,000 units of musical instrument Dholak. Okay. The cost data for the year ending 31st of March 2025 is as follows. Expenses paid for pollution control and maintenance. Okay, I think so. This should be factory overheads. This is almost the last item in your factory overheads. Please check it out. Expenses paid for quality control check activities. This comes below factory cost. I'll write down. But above cost of production. Okay, so check it up in your format of cost sheet. Lease rent on production assets like machinery you might have taken on rent, factory you might have taken on rent. Production assets means all those assets which are used in the production, you have taken them on rent. It could be factory, it could be your plant and machinery. Obviously will be part of factory overheads. Hire charges paid for hiring specific equipment. This I think so everybody will recall will be nothing but direct expenses. Primary packing, again it comes below factory cost because the product is completed. Okay, but it comes above your COP. The same thing as this comes, this also comes. Direct labor wages, so therefore this is your direct labor cost. Fees paid for technical assistance. Again I try to be thinking this will be part of direct expenses only. Why? Because technical assistance you will need for a specific kind of product only. So therefore that this is a direct cost for this. For making dholak, you require technical assistance, especially for dholak only. Okay, so therefore this will be kind of it cannot be direct material and direct labor, no? So therefore should be coming as part of direct expenses. Further, opening stock of finished goods as on 1st of April 2024 is 10,10,000 and it is 2,000 units. So 10,10,000 divided by 2,000. So per unit will be 505. Closing stock of finished goods as on 31st of March 2025 is 1,000 units, but its amount is not known. Cost of production is given to you, 27,50,000. It is further ascertained that labor is paid at the rate of 1,000 rupees per hour. Please connect this data to this particular data. Total amount that you paid to labor was 6 lakh rupees and you are paying them at the rate of 1,000 rupees per hour. So therefore, those guys must have worked for 6,000 hours. That is 6 lakhs upon 1,000. Specific equipment is hired for the number of labor hours worked. See over here, hire charges for specific equipment was 315 per hour. 315 per hour, you require number of hours, no? Now number of hours, those guys have told, will be number of labor hours only. Okay, so therefore 315 into 600. So therefore 1,89,000 will be nothing but your direct expenses. The company follows FIFO method for valuation of closing stock. S&D is rupees 25 per dholak. See, we sold 6,000 units, no? S&D is dependent upon quantity sold. 6,000 into 25 will be 1,50,000. Further, profit is 20% on sales. What you have to do? You are required to prepare a cost sheet showing raw material consumed, prime cost, works cost, COGS, COS and net profit and sales. Okay, we shall be doing that. Now, whichever things I have posted, I will tell you all directly. I'll mark them in red. This will be coming as part of factory overheads. So, check it up. I must have written over here 93,400. Then second figure, expenses paid for quality control check activities. Below factory cost, above cost of production. So, therefore, below factory cost and above cost of production. Same thing for primary packing also, 51,600. Same thing for this also. Okay, further. Lease rent of production assets, 1,20,000. So 1,20,000 must have come over here. Further. Hiring charges paid for hiring specific equipment. So therefore 1,89,000. So 1,89,000 is part of direct expenses. So therefore it is over here. I've shown the calculation over here also. Okay. You are hiring equipment. I think so. Next line, not much required. Even if you don't know, that's okay. You are taking some equipment. You might require some technical assistance for it. Okay. In any case, this should be coming as part of direct expenses only. Fees paid for technical assistance. Okay. This particular figure. Further, primary packing cost I've discussed. Direct labor 6 lakh rupees. Okay, that'll be coming as part of your direct labor cost. Okay. Then further, sorry. Further, this is also done. Acha. Opening stock of finished goods 10 lakh 10,000. Opening stock of finished goods is 10 lakh 10,000 divided by the quantity of opening stock. So 505. I calculated above also, I guess 505. Closing stock, we shall wait for that. COP is given to you 27 lakh 50,000. COP is 27 lakh 50,000. That is given to you in the question itself. Okay. Further. Labor is paid at the rate of 1,000 rupees per hour. We use that information for direct expenses. Specific equipment is to be hired for number of labor hours worked. We use this thing for calculating the direct expenses. Company follows FIFO. S&D will be 6,000 units that we all have sold. At the rate of, it says 25 rupees per unit. So therefore 1,50,000. So 1,50,000 will be coming over here. Okay. Further. Profit is 20% of sales, that we all will wait. See. Now, listen to me very carefully. See, this data you had, no? This also you have, this also you have. This will be your balancing figure. I have written over here balancing figure number 1. There are 2 factory overheads, they total up to this. Subtract, this will be your balancing figure number 2. You all have this, you all have this. Your direct material will be your third balancing figure. That is 15 lakh rupees. You should have got 15 lakh rupees over here. Okay. Now, let's go down. See. Now, one information that you will still have to be computing. Quantity sold is 6,000 given to you on the first line of the question. Add closing stock of finished goods less opening stock of finished goods. So, 6,000 plus 1,000 less 2,000. How many units of finished goods you all have produced? 5,000. So, 27 lakh 50,000 is the cost of producing 5,000 units. So, please divide. It will be coming to 550. As you are following FIFO method, closing stock will get valued at 550 only. You have 1,000 units in closing stock. So therefore, 5,50,000. Okay. Once you all do that, you will arrive at your COGS. In case you want per unit, you all can always divide by quantity sold. That is 6,000 units. Okay. That's it. Add up your S&D. That'll give you cost of sales. In case you want per unit, this will be your answer also. And lastly, those guys want 20% profit on sales. So 1/5 of sales. 20% is 1/5. No, there is also 1/4 of cost. No, 33 lakh 60,000 divided by 4. So therefore 8 lakh 40. You can total it up. This will be your total sales. In case they would have asked you for the selling price is 700 rupees. Okay. That's it. These are your 9 marks questions. Okay. It depends upon the institute, to be very honest. I am not trying to be saying anything over here. Okay. So those guys will be having some allocation of their own. Based upon that, marks will get allotted. Where you could have gone wrong over here, I think so. You could have taken this figure elsewhere. Due to that, your some answers will change here and there. Okay. Rest, I don't think so. There was anything much in this question. Chaliye, this question is altogether done. Question was not that long this time. It was long in the earlier attempts because there were a lot of items. This time it was not long. It was a bit technical as such. Okay. Chaliye, this question is done. You all can tell me which parts did you get right, which parts did you get wrong. Chaliye guys, we'll start away with question number 2B. Now this was a special question on process costing. I really think not many people would have got this answer correct. It's very different question. Although of process costing, no statement of equivalent output, no nothing. Basic question of normal cost. But still, I think extraordinary question. If somebody has got it right. In fact, I think most of the people who would be making the videos also of the solution, even those guys will be getting it wrong. Especially if they use ChatGPT to get the answer. The producer of oil purchases, let's do know. Oil purchases at the rate of 75 rupees per litre in container of 40 litres each. So we purchase 400 liters of oil at the rate of 75. Whenever we purchase in containers of 40 liters. So I guess for 400 liters, we will be having 10 containers. Okay, I'm writing over here 10. Okay. Other expenses in the process were 37,350, including abnormal loss. of 12,500 due to an accident. Please do remember, in process costing, in your process account, you do not record any abnormal expenses. Okay, you try to record all your normal expenses. So out of 37,350, 12,500 will be directly going to costing P&L account. That also we have to prepare. Normal waste is 10%. Normal waste is at the process is 10%. Okay, so 400 liters you purchase. Normal loss is 10%. So see over here, out of 400 liters that you purchased, 10% was supposed to be normal loss. So expected output was supposed to be 360. Now this is where it gets very interesting. Okay, this part. Waste is sold at the rate of 10 rupees per liter. Not even this. After this. So this normal loss is sold at the rate of 10 per liter. Okay, this is a scrap value of your normal loss. And each container is sold for rupees 50. Okay, each container is sold for rupees 50. Okay. So see, you are going to be purchasing 10 containers also. Now cost of containers is not separately given. So it must be included in this. So we purchase the oil in containers. Containers come to us. Now those empty containers are of no use. We sell them. We sell them at what rate? 50. So therefore, we get scrap value from two places. One by selling oil, okay, means the waste of the oil that is given to you over here. And one by selling containers. But can you sell all the containers also? No, because this is next line also. Generally, 10% of the containers get damaged so badly that they are unsellable. Okay, so 10 containers. Okay, those guys are told, I'll write slightly down, 10 containers. They are saying out of that, 10% gets so badly damaged usually that they are unsellable. So at least 9 should be getting sold, no? So you should be getting scrap from 9 containers. However, in this given situation, more containers were damaged and only 5 containers were there in sellable condition. So you should have usually sold 9 containers as scrap. But in this, you could only sell 4. So therefore, 4 was abnormal loss of containers. 4 was abnormal loss of containers. Further, actual output was 375 liters. So see, for oil, 400 kgs at the rate of 40, 360. But actual output was 375. So therefore, there was abnormal gain of oil of 15 liters. Okay, that is one thing. Second thing over here, for containers, let's try to talk of containers over here. Containers, out of 10 containers, usually one of them cannot be scrapped. That is whatever is given, it is damaged so badly. Okay, so at least 9 should be getting scrapped. But only in this situation, only 5 got scrapped. So therefore, 4 will be abnormal loss of containers. Okay, further. Actual output was 375 liters, which was sold at the profit of 20% on cost. You are required to prepare process account and income statement. Income statement means costing profit and loss account. Okay. Now, this is the quantity details that I have prepared extra just for your reference. It is not required in exam. I just did, so therefore there is no doubt as such. But one thing that you have to be understanding, whenever you make a process account, no, that process account will actually be process account of oil and container mixed. Sir, why mixed? Why can't you prepare separately? Because this cost includes cost of the containers, because containers cost separately is not given. So therefore, it must be included only, in this. Okay. So now listen. First of all, you purchase oil 400 liters at the rate of 75. So therefore, 400 liters at the rate of 75, 30,000. Then there are other expenses, but please you exclude that abnormal expense of 12,500. Okay. So therefore, I've written 24,850, the remaining expense. Now, in this entire process, there are 2 types of normal losses. Which 2 types? First of all, 10% of this is scrapped at the rate of 10 rupees. 400, 10%, that is nothing but 40. That 40 are written over here also. And that is scrapped at the rate of 10 rupees. Okay, so therefore, we should be getting 400. And out of 10 containers, 1 container is usually so bad that it cannot be sold. Remaining are 9 containers. Those should be getting scrapped at the rate of 50. So therefore, 450 will be getting by that. Is that all okay? Is that all okay? Now see. So I've explained this, I've explained this, I've explained this, I've explained this. Please do remember that we will not be recording quantity of container. It is nowhere required. You cannot add containers quantity over here, that will increase and mismatch all the quantities. You cannot add the quantity of oil and the quantity of container. No, it will become very stupid. Okay, so one thing in this entire account, I have explained you this entry. I have explained you all this entry. I have explained you all this. I have explained you all this. Okay, that's it. My job is altogether done. Now listen to me very carefully. We got to be finding out normal cost. There is no WIP stock as such. So normal cost is direct material plus direct labor plus direct expenses plus factory overheads less scrap value of normal loss divided by expected output. So direct material plus direct labor plus direct expenses plus factory overheads. These are the expenses, to be honest. They have not given separately direct labor, direct expenses. Less scrap value of normal loss. There are two scrap value of normal loss. So therefore this plus this minus this divided by expected output. If you all have made this, expected output is visible over here also, else input minus normal loss. This figure minus this will be giving you 360, that is expected output. You get it, answer will be rupees 150. Now, where has this come? Sorry. Now further. See. Now, whatever gets finished, that will be costing 150. So therefore, try to be thinking, finished output was 375. 375 at the rate of 150, 56, 250. Further, one other thing also, there will be abnormal gain over here. In any case, that will be your balancing figure. So therefore, 15 liters at the rate of 150, that is 2250. Okay. Now, this job is done. Okay. Now see. Now, after doing this, you should be able to understand few things over here. Okay. See. Now, you have to be making kind of, you can call this as any account. Okay, I don't understand the name as such much. Okay, but you can call this particular thing as any account. Some people might call this thing as normal loss also. Some people might call this account as abnormal loss also. You might simply call that particular thing as containers account also. I'm okay by that also. Okay, see. For containers, I was expecting scrap value of 450 from selling 9 containers. Okay. But I sold only how much beta? 5. Remaining 4 was abnormal loss. That will be going to costing profit and loss account of 50 rupees. If you want, you can record over here quantity 4 also. Okay. The same thing I had recorded over here also. You can call, again I'm saying, please don't go by the name of this particular thing. You can call this thing as containers account also. Okay. See, my only purpose is you should have got scrap value of 450. But out of 450, you will be only getting 250 because you will be selling because you will be selling 5 containers. Remaining 4 containers, scrap value, you will not be getting as such. Okay. So this amount will be going to costing profit and loss account. Do remember this. And then there is abnormal gain also. Sir, how abnormal gain? This particular figure, no? Abnormal gain. So this will be coming over here. If you all recall your abnormal gain account always works in this manner, no? On credit side, we try to be writing. We produced 15 units extra. So therefore, we saved cost at the rate of rupees 150. But if this was not abnormal gain, this would have been normal loss and would have been scrapped at the rate of 10 rupees. But that amount is gone now because this output has become good output. So therefore, this much is lost. So therefore, this is your net profit that will get transferred to costing profit and loss account. Okay. Now, let's come over to costing profit and loss account, or you can call that thing as income statement, whatever you all wish like. See. First of all, on credit side, sales would have come. I have not made it in a T format. Okay, but just like, sales. So those guys are told that it was sold at a profit of 20% on cost. My cost was over here, beta. 56,250, 375 units. 56,250 plus 20%. So therefore, this was your sales. This was your cost only. Plus, in this case, there was abnormal cost of 12,500 right in the beginning, which we did not take in the process account. Of course, will be coming in your costing profit and loss account. So therefore, that amount I'll be reducing from here. Plus, in this case, there is abnormal gain of oil that is just now calculated 2,100. That is this particular figure. And then there is abnormal loss of containers. Abnormal loss of containers over here, that is nothing but 200. Okay. Once you all do that, this will be giving you all net profit of 650. I have tried to explain it, okay, in slightly a faster way. In case you all have some doubts, you can post in the comments below. I'll try to explain further if I can, okay. But this was a question that required good amount of concepts. If you don't know your concepts of process costing, it's horrible to be doing this question. Most of the students, I think, would have got this entire question wrong. If you have got it correct, okay, write down your name below and proudly say I got it correct. And honestly, I will also be proud of you. Okay, chalo. This question is altogether done. Question number 3A. Some people might say this is a question on service costing. I thought this is of overheads. It hardly matters. Okay. Let's start to be doing this. Nice question. Gold Drive Bank is having a branch which is engaged in processing of gold loan and car loan application. In addition to other services to the customer. Although this part we all are not interested in this question. Further. The bank has hired 3 professional workers for processing gold loan applications. 3 is important. And 4 direct. Over here also it is 3 direct. 4 direct professional workers for processing car loan applications. Okay, so people take loan, no? So we have hired professional people for taking the applications from the customer. We have taken 3 professional workers who will be handling the gold loan applications and 4 people who will be handling car loan applications. Further, in addition to above, the following expenses are incurred by the branch. Okay. Branch manager who supervises all the activities of the branch is paid rupees 1,10,000 rupees per month. Okay. Legal charges, printing and stationery and advertisement are expected to be 28, 15 and 20,000 for a month. Month. Other expenses are 51,000 for a quarter. I'll divide by 3, it'll become 17,000 per month. Let's do all the things for a month. Depreciation on the building is 4,20,000 per month. Sorry, per year. So therefore, I'll divide by 12, 35,000 per month. Overheads of the branch allocable to the processing of gold loan applications and car loan applications is 20 and 15% respectively of the total overhead cost of the branch. See, apart from these 4 expenses, they are saying there are some other overheads also which are supposed to be charged to gold loan applications. And these are kind of your 2 products you can be saying. Okay, you are a bank, no, as such. Okay. So, whatever is the total cost, in fact, total cost is this plus this plus this plus this plus this plus this. Whatever is the total that comes, into 20% is an extra expense for gold loan applications and 15% is further expense for car loan applications. Okay, this is to be charged to them. Further, number of applications processed for gold loan is 400 applications, for car loan is 500 applications. Okay, you are required to calculate total salary. Now this is important. Most of people would not have understood only what those guys are asking. See, compute the total salary of the 3 direct professionals, for processing gold loan and car loan applications by assuming that cost of processing a car loan application is same as gold loan application. See, if you all try to think, no, those guys have not given us the salary only of this. Those guys have not given us the salary only of these people. And that is what they are trying to be asking, that you find out the salary of these 3 people, find out the salary of these 4 people, assuming that cost of processing a car loan is same as cost of processing a gold loan. Okay, understood this? Further, find out the total cost of processing a car loan, application. Okay, now see, first thing is what I did. See, you all should understand that this data, when I read the question for the first time, I was always searching, that if suppose gold loan is one product and car loan is another product, we have hired 3 people especially for this, 4 people especially for this. I was always searching, where is the salary of these people, so therefore I can find out the cost. But that is what question is asking you. Find out the salary only. So therefore you have to find out the salary. Okay. But you have to find out the salary assuming that cost of processing a car loan is same as cost of processing a gold loan application. Okay. So what you should do, equate the cost of processing one gold loan application and one car loan application. Equate this particular thing, you'll get your answer. But for equating the cost, you have to find out the cost now, first of all. Let's total up 1, 2, 3, 4 that I have done over here. This is, it should be 1,10,000. I have calculated correct. I think I could have written wrong. This is 1,10,000. 28, 15, 20, 17, 35. Total is 2,25,000. 2,25,000 into 20% will be added more for gold, and 15% more will be added for car loan. Okay, so till now, which are the expenses? This is the expense of the entire branch. This is the expense of the entire branch. Apart from this, for gold loan, there is especially a charge of 45,000 and there is especially a charge of 33,750. Okay. Is this okay? Till now it is simple. Now it is going to be slightly different thing. Okay. I'll not say different, but you all pay attention here. See, there are 3 professionals over there and 4. Let the salary per professional be same. That is an implied assumption. Let it be X. So here there are 3 people, so therefore it will become 3x. Here there are 4 people, it will become 4x. Okay, now see. Salary as above. Now, see, let the salary of each professional be X. So therefore 3 people for this, 4 people for this. Okay. Now this thing is most important. See, my branch cost is 2,25,000. My branch cost is 2,25,000. Okay. I'll write down over here 2,25,000. Okay. 2,25,000. Now think. Those guys have told in end, you assume that cost of processing a car loan is same as cost of processing a gold loan. That means cost per application should be same. If cost per application should be same, you can divide in the ratio of number of applications. No? Just as in process costing, if you all remember, in joint products, byproducts, if you all remember, you can follow output method if both the products are same. Same way, if per unit cost of this application should be same, you can divide in the ratio of number of units. That's what I have done over here. See, 2,25,000 I've divided in the ratio of number of application, that is nothing but 400 is to 500. Okay, so therefore 2,25,000. So try to be thinking, what are the expenses for gold loan? One is the salary of those 3 professionals, that is 3x. For car loan, it will become 4x. 2,25,000 I divided in this particular ratio. Okay. Please, if you have done by some other method, just match your answer towards the end. If it is correct, it will be all okay. So therefore, you might not try to be saying I have done by this method. You do by any method, final answer should be same. Okay. Then these are the overheads, especially for each and every type of this thing. So therefore, please total up 1, 2 and 3 that I have done over here. Please total up 1, 2 and 3 that I have done over here. These are the total costs divided by the number of applications. This will give you cost per application. Common sense now. This has to be equal to this. That is whatever part 1 had told me. That cost of this should be same as cost of this. So therefore, these both should have been same. No as such. I have equated that particular thing over here. X is equal to 90,000. So therefore, salary of one professional is 90. There are 3 professionals over here, 2,70,000, and there are 4 professionals over here, 3,60,000. Okay. You should have reached till here in this entire question. Now, one thing, please, I do not use anything like ChatGPT to be arriving at the answers, which many people are doing. Okay. ChatGPT doesn't have its own brain. Those are algorithms which are built in. If you will say, no, as per me, this is the correct answer. Mostly it will say whatever you have written now is correct. Their previous answer is wrong. Many professors especially are doing this, which I think it is how stupid. Chalo, I'll not like to be commenting much about that. The last thing. Find out the total cost of processing a car loan application. Okay. Find out total cost of processing a car loan application. See, this is the total cost. Okay. So I'm trying to arrive a car loan application. So therefore, see what I have done. 4x plus 158, 750. This particular figure. So x was 90,000. Correct? So 3,60,000. 4x no. Plus 150, 750. So therefore, this figure will be this. Divided by 500 applications. So therefore, cost of one car loan application will be 1037.5. This should have been your answer to part 2. This is a tough question. I don't know how many people would have got that correct. But if you got, okay, you can put a thumbs up in the video and you all can write again your name, sir. I got this answer correct. Okay, it's a brilliant question. You have good brains. Will help you in future also. Chaliye, this question is done. So guys, so question number 3B. This was on service costing. Okay, question. Not very difficult. Okay. Part 3 is something that if it will strike you, you'll get the answer within say 10 seconds. If it will not strike you, then it is very difficult. Okay. Let's do this question. Wings Institute of Air Hostess Training has reserved spacious training hall for rupees 25,000 on these things are very important weekly basis with seating capacity of 320 trainees. So therefore they do the training for becoming a air hostess. They have taken a hall. Weekly rental is 25,000 and capacity is 320 trainees. Okay, the institute has designed an intensive training schedule comprising of 3 training sessions per day. Okay, so there will be 3 lectures per day, 5 days a week for 25 weeks on aviation and hospitality. So every day there are 3 training sessions. Likewise, there are 5 days in a week when the lectures will go on, and this will go on for 25 weeks, I think in a year only, on aviation, that is the airlines, and hospitality. Training delivered by a lead trainer to whom honorarium of 3,600 per training session is paid, not per training date, is per training session. Okay. In addition, she received travel reimbursement of 500 rupees per day. So this is per training session, but she receives a travel reimbursement of 500 rupees per day. And refreshments costing 1,200 rupees per week. Okay. To maintain comfort and focus during sessions. She also takes 2 lectures per week on safety and customer service during weekends. Okay. Only at 5,000 rupees per lecture. Okay. Inclusive of traveling and refreshment expenses. Ensuring complete coverage of aviation education. Okay. Training support services covering utilities and essential training aids amount to 2020 per week. Okay, you are required to calculate training cost per batch. I think so. No, ICAI for clarity purpose should have told that this entire thing goes on for how many weeks. But I try to be thinking that, like, even if it is say 25 weeks in a year or it is simply say 25 weeks, our answer will not be changing. Okay, so therefore one training batch goes over for 25 weeks. Okay. Try to be calculating all the things for one batch. One batch means 25 weeks. Okay, please remember that. Second, determine the minimum training fees per training in a batch to cover the cost if the batch is fully occupied. Okay, so find out the minimum training fees that you have to be charging, assuming that batch is fully occupied. Fully occupied means there are 320 trainees. Further, if the institute targets a profit of 20% profit margin on training fees and decides to charge 14,800 per training, then calculate the minimum percentage of the batch to be filled up. I like this part 3. Okay, I don't know how many people would have got it, and I don't know for how many marks it will be, but simple calculation, but it should have struck you at that time. Okay, chalo, I'll come over to that part after some time. Few things I'll underline. 3 training sessions per day, 5 days a week for 25 weeks. Okay. Honorarium of 3,600 per training session. Then 500 rupees per day. Refreshments costing 1,200 per week. Then she takes 2 lectures per week on safety and customer service during the weekends. Okay. Only at 5,000 rupees per lecture. Inclusive of traveling and refreshment expense. So this 5,000 includes all the things. Ensuring complete coverage of the aviation education. Training support, again this is 2020 per week. So find out the cost of all these particular things. We all can start from the beginning, whichever costs are there. So first of all, I guess, so the first cost over here is the hall rent cost. See what I have done over here. 25,000 per week. Obviously one hall will be taken on rent. So therefore 25,000 into 25 weeks. That will bring you the first answer. So 6,25,000 is the hall rent. Okay. Then we pay the lead trainer. Okay, we pay the trainer an honorarium of, see over here, 3,600 per training session. Every day there are 3 training sessions that will happen for 5 days in a week. That will happen for 25 weeks for the entire batch. Okay, so this will be your answer. Then there will be a travel reimbursement of 500 rupees per day. See over here, 500 rupees per day into 5 days, that I've written as 2500, 2500. This is actually 500 per day into 5 days into 25 weeks, that will be coming over here. Okay, further. Then refreshments will be costing 1200 per week. So 1200 into 25 weeks directly, because it is per week, no? Okay, further. Then she also takes 2 lectures on safety and customer service during weekends. Now, one thing somebody can be thinking and not wrong. Sir, those 5 days a week, okay, are Monday, Tuesday, Wednesday, Thursday, Friday. So she is taking lectures more on weekends. So what about those 2 days up and so on? Okay. Does the hall rent include that? I think so it will be. So we pay 25,000 rupees for the hall rent per week, means for 7 days only. Although for first 5 days, the normal lectures are taken. For the last 2 days, she takes lectures on this particular thing. Okay. And she charges 5,000 rupees per lecture. That includes all the things. So therefore, 2 lectures of 5,000. This is per week into 25 weeks. That is whatever I must have written over here. 2 into 5,000 to 25 weeks. Okay. And then trainee support and services will be costing 2020 per week, obviously into 25 weeks. So therefore, the total cost that you all should have got is 23,68,000. This is the cost per batch. Mind you, one small thing, this cost is fixed cost per batch. There is no cost in this entire question, which is a variable cost, which is dependent upon number of trainees. There is not even one single cost like this. Okay. So please do remember that, do note it in a proper way. There is no cost over here, which is in this case per training. Okay. This particular cost is fixed cost. Okay. Part 1 is done with this. I think so it should be 2 marks question, 2 marks question, 2 marks question. Or it could be 3 marks, 1 mark and 2 mark. I'm not sure. I'm just trying to have a guesswork. Second, determine the minimum training fees per trainee in a batch to cover up the cost if the batch is fully occupied. See, if the batch is fully occupied or whether it is not occupied. In any case, this will be your cost. This is the cost. And this cost is to be recovered over 320 trainees. That is whatever those guys have told. If the batch is fully occupied. So therefore, this divided by 320 will be giving you 7,400. This is the minimum thing that you should be charging. See, this is your cost beta. You need to recover your cost, no? So therefore, in order to break even, you should try to charge at least this much. So therefore, you all don't have a loss as such. Okay. So therefore, this is kind of break even fees for you. This is the minimum fees that you got to be charging. The minimum fees that you should be charging is always your cost, no, as such. So therefore, this is the minimum fees that you all should be charging. Okay. This is first, this is second. The third one. If the institutes target 20% margin on training fees, okay, and decides to charge 14,800 per training, then calculate the minimum percentage of the batch size to be filled. I found this part pretty interesting. See, we want 20% margin on the training fee. See, 23,68,000 is my cost. Okay. This is, I'll write it over here. Now, this is my fixed cost per batch. Okay. 23,68,000. I want my profit also, beta. So that will give me the amount of revenue or the total fees that I have to recover. I want a profit margin on 20% on training fees. Training fees means revenue that we'll be charging, no? So this is 20, this is 100, this figure is 80. First of all, cross multiply and try to arrive at this particular answer. Okay. Now that figure I have calculated over here, 29,60,000. Okay. So therefore you all can cross multiply 29,60,000. Okay. Now see, can we say if we want to have a profit margin of 20% on training fees, this is the amount of revenue that I will want per batch. Please do remember that this is a revenue fixed irrespective of the batch that we all want. And those guys are saying that how much I'm going to be charging per trainee? 14,800. See, this is the total revenue to be charged or to be recovered from all the people. Divided by the revenue or the fees, okay, per trainee. So therefore, we are going to be charging 14,800. So therefore, this will give me number of students or number of trainees. Okay, please divide. This will be coming to 200. If 200 people come and from everybody I charge 14,800, can we say entire batch revenue will get recovered, no? So therefore, I want 200 trainees. So therefore, I can be recovering a profit of 20%, okay, on my training fees. Now, those guys want percentage. So 200 I want, the capacity is 320 into 100. So therefore, this should be, I guess, 62.5%. So therefore, this much amount of batch should get filled. So therefore, if you get this much amount of, like, these many percentage of the students as compared to your capacity, I guess you will be able to get your 20% profit in that batch. Okay, that is whatever I must have written over here also. So 29 lakh 60 divided by 14,800 per training. This will give you 200 trainees. 200 divided by 320, that will give you 62.5%. I am pretty confident that most of you all would have got part 1 and part 2 correct. Part 3, if somebody has got it correct, good brains, you all can tell me below which people got part 3 also correct. Okay, chali, this question is all over. Chali, question number 4A, this is on standard costing. Okay, simple question on material, labor and variable overheads. We have exactly the same type of a question. In fact, you all have much more as compared to this. Question number 4A, standard costing. The following data pertains to a company engaged in manufacturing and sale of a single product during the year. Okay. Particular budget actual. Sales is there. We had thought that we are going to be producing 60,000. We actually produced 66,000. Now, one small thing. By default, there are no stocks in any question. So, therefore, whatever you produced, you sold. Okay. Or vice versa. Whatever you sold, you produced. So, therefore, we thought we'll be producing 60 and sell 60. But in reality, we produced and sold 66,000. Sales, this is actual sales. Now, this data will be of no use because they are not asking you sales variances. Okay? They are not asking you that particular thing. Material cost, budgeted or standard, should have been this much. In actual, it was this much. But do remember, this much should have been for these many units. In reality, it was this much for these many units. Same way for labor, same thing for variable overheads. Now, variable overheads by default means variable factory overheads. One small thing. Material variances are always dependent upon output. Labor variances are always dependent upon output. Variable factory overhead variances are by default dependent upon output only. All these three are always dependent upon output only, beta. Additional information. Direct material price per kg. Standard was 10, actual was 8. Direct labor rate per hour. Standard was 10, actual was 12. You are required to 5 variances: direct material usage, price, efficiency rate, variable overhead, cost variance. For variable overheads, no, they have not asked you expenditure and efficiency. They have not asked you for the breakup. They have only asked you the first variance, that is variable overhead, cost variance. Let's start away with the material part. Okay, see. Now, this is simple. Okay, I think everybody would have got this thing correct. Okay, in fact, now I'll want names of those people who have not got this question correct, because I think most of the people would have got it correct only. See. Material variances are dependent upon output. For 60,000, what should have been the material cost? 28 lakh 80. And raw material should have been purchased at 10 rupees. This data I've written over here. So the standard or the budget that has been given is for 60,000 units. For 60,000, our cost should have been 28 lakh 80. Standard rate over here, I have put over here. So therefore, please divide. This will be your standard quantity. But this is a given standard for 60,000. Okay. But in reality, how many units were actually produced? 66,000. So therefore, we should prepare a revised standard for 66,000. So please cross multiply. For 60,000, this is the quantity. For 66, it will be coming to 3,16,800. A raw material should have been purchased at 10 rupees. So therefore, please multiply 31,68,000. And in reality, this was your material cost. See over here, this was your actual material cost for 66,000 units. That figure I've put over here. An actual rate of direct material that you purchased per kg was 8 rupees. So therefore, please divide. This will be giving you actual quantity. Once you all have that, you all can compute price and usage variance. Price will be this minus this into this. That is one thing that I've done over here. 10 minus 8 into actual quantity. 907,500 favorable because you have purchased at a lower rate. And usage variance will be, you should have purchased this much quantity, you purchased this much quantity into standard. So therefore, this figure minus this figure into this particular figure. This will be giving you 1369,500 adverse. So this will be, in this case, your material variances. Exactly the same thing, please do for labor. Exactly the same thing. Now I'll try to speed up the work a bit. So now I don't need to be highlighting these things. I will highlight labor things. Okay. So therefore, this is the data of labor over here. This is the data of labor over here. So in your given standard, 60,000 units, cost should have been this, rate should have been this, divide, you will start to get your standard labor hours. But those are the standard labor hours for 60,000. Okay. In actual, this was your labor cost, workers were paid at this particular rate. Divide, you will be getting actual labor hours also. So therefore, that information I've put over here. Okay. 60,000, 43 lakh 20, standard rate is 10. These are the standard hours. Okay. In actual, you have produced 66,000. This is your actual cost at the rate of 12. These are your actual hours. Okay. Of course, prepare revised standard for 66,000 units. Okay. So please cross multiply. This will be hours. This rate will come over here. And then this will be your standard labor cost for actual output. Then compute your variances. Your labor rate variance will be this figure minus this figure into actual hours, 8,80,000 adverse. Efficiency variance will be how many hours you should have taken, 475, 200. I will rub these things, else you will become mad. Efficiency variance, how many hours you should have taken this, how many hours you all took this, okay, into standard rate. So therefore, this minus this into this, 3,52,000 favorable. Okay, because you all have taken lesser hours. Okay, that job is done. So your 4 variances are done: material price, usage, rate and efficiency. Variable overhead cost variance, still dependent upon output, although I don't require the breakup. So therefore, now I'm highlighting 2 different things over here. Okay. I could have done the breakup also, but it is not asked as such. This information. Okay. And that will be enough for me. For 60,000, your cost should have been 72 lakhs. For 60,000, your cost should have been 72 lakhs. But for 66,000, in reality, your cost is 81,84,000. That figure has come over here. Okay. Please prepare a revised standard. Revised standard will be there for 66,000 units. That's it. So therefore, 60,000, this is the thing. For 66,000 cross multiply, it will be coming to 79,20,000. So total variable overhead cost variance will be how much you should have incurred, how much you actually incurred. Actually, you have incurred more. So 2,64,000 adverse. Okay. That's it. Now, it could have happened that here, this is for 2 marks. This is for 2 marks. It's a 7 marks thing, no? So, it could have been, I will not try to guess it. Okay, forget it. Let's leave some of the works to the institute. If everything we will try to be doing, what those guys will be doing. Okay, so this question is finished. I think so. Everybody would have got it correct. I don't think so anybody could have committed any error over here. Okay, chali, this is done. Chali guys, we'll start away with question number 4B, that is cost accounting system. Now this same question, obviously with different numbers, replica is there in your textbook. Exactly the same question. There is no difference between that and this. Everything is on the similar lines of reconciliation that we all have done. The following information, in fact, just one small thing, all these questions that we all are doing now, most of them are available free on YouTube. The lectures that I have posted every damn lecture that you require to get 95 plus in costing, and these lectures are free. I don't charge for lectures. I'm not charging for the book. I'm not charging for the test. I'm doing whatever I can, okay, for you all. So please ensure that you spread the word. So therefore, other people who are charging so high, not giving the content, not giving the logic also, those guys, just because of their marketing, they do not try to exploit you all. Okay, education has become like a bloody business these days. Okay, ensure that you all are not affected by all these people. And as I've told in past, most of them sadly were my students only. Okay, let's do it. The following financial information is available for a company with normal production capacity of 40,000 units. One thing I'll remind, absorption rates are always based upon normal capacity. For the year ending 31st of March 2025, sales amounted to 8 lakh rupees, units sold were 35,000. Okay. There was no opening or closing stock of finished goods. Now see, if there is no opening or closing stock of finished goods, okay, then whatever you sold, you must have produced also. So therefore, units produced also will be 40,000. Sorry, units produced also will be 35,000. Sir, then what is 40,000? 40,000 is your normal capacity. You had thought that you will produce 40. Absorption rates are based upon normal capacity, but in reality, you produce 35,000. Okay, further. Direct material and direct wages were this much and this much respectively. Actual factory expenses were 1 lakh, out of which 55,000 is fixed. I'm going to be writing two amounts. So therefore, fixed amount will be 55%. So therefore, 55,000. Variable will be 45,000. Admin expenses related to the production incurred during the year but were not paid were 50,000. But then they have been incurred, no? So that's okay. Whether they are paid or not, in any case, they will be written, which are entirely fixed. So therefore, fixed administration are 50,000 rupees. Actual S&D expenses are 20,000, of which 35% are fixed. Okay. So fixed will be 7,000. Okay. And variable will be remaining 13,000. The company earned interest and dividend income totaling up to 10,000. This will be income only in financial books. You are required to prepare the cost sheet and ascertain the profit as per cost accounts for the year ending 31st of March 2025. Assuming that, see over here, same words that were there in the question that we all did also in class. Assuming that indirect expenses are absorbed on the basis of normal production capacity. Indirect expenses means overheads. So those guys are saying, assume that all the overheads are absorbed based upon normal production capacity. And normal production capacity is 40,000 units. Okay, do remember that. A statement reconciling profits as shown by financial and cost accounts. Okay, so you have to reconcile profit shown by financial and cost accounts. Can I do one small thing extra first only? Let me find out the profit as per financial accounts. Okay, then I'll try to find out the profit as per cost accounts by making cost sheet. Okay, so let's make manufacturing, trading and P&L account to find out the profit as per financial accounts. Simple it is. Sales 8 lakh rupees will come on the credit side. Okay. DM and DL 3 lakh 50 and 2 lakh rupees will come over here. Then see. Now one small thing. Actual factory expenses were 1 lakh, of which something was fixed. That's all okay. Now, one thing I'm saying, those people who were not my students, those guys will try to be thinking whatever I'm speaking is nonsense. Okay. Those guys who were our students, those guys will realize also whatever I'm saying makes absolute sense. Now, under financial accounts, first of all, do remember, absorption costing, in fact, it's not under financial accounts also, just a normal thing. Absorption costing only applies to overheads. In overheads also, it only applies to fixed overheads. In fixed overheads, also there is one other thing, but I'll not talk of that. For the timing, it only applies to fixed overheads. Okay. So it does not apply to variable overheads. So for variable overheads, we always record actual amount. Okay. So therefore, we'll be recording actual amount. We will be recording actual amount for all the variable overheads. For fixed overheads, the first thing that we all do in financial accounts also, we record absorbed amount. Hey, some people might be wondering, what nonsense? No, this is the reality. But then under financial accounts, you cannot carry forward under and over absorption. So ultimately, you will adjust it. If you will adjust it, absorbed amount will get converted into actual amount. So therefore, even for fixed overheads, ultimately in financial accounts, you record actual amount only. Okay. Although that is also in two steps. First, you record absorbed amount, then you record under and over absorption because that cannot get carried forward. So in other words, variable will also come, fixed will also come. Okay, then why do you require the breakup? No, you can simply write down these particular things only. So therefore, 1 lakh for factory, 50,000 for admin, 20,000 for S&D. That is whatever I have done over here. Okay, interest and dividend received is the last adjustment over here. That is income only in financial, but then these are financial accounts only. So therefore, your net profit as per your financial accounts will be 90,000. Okay. Now, actually, your part 1 of the question starts. Those guys are told, find out the profit as per cost account. So, let's start to be making cost sheet. So, in cost sheet, quantity produced and sold of finished goods is 35,000. Okay. Per unit column is not needed because there is no stock of finished goods. Okay. Now, Direct material, direct labor, in any case, you always record actual amount. Okay. That will be giving you all prime cost. Okay. Now see. Simple it is. Absorption costing only applies to fixed overheads. It only applies to fixed overheads. It only applies to fixed overheads. For variable overheads, we will still be recording actual amount only. That is whatever I have done. So variable factory overheads 45,000. Check over here. 45,000. Okay. There is no variable administration. There is variable S&D 13,000. So therefore that amount also you all will see over here. Okay. So therefore that amount also I have done. But under costing for fixed overheads, we always record absorbed amount first. For absorbed amount, you require absorption rate. There are 3 overheads. There will be 3 absorption rates. How do you find out absorption rate? Absorption rate is equal to BOH divided by BLA. Okay. BLA means budgeted level of activity. And we always absorb all the overheads based upon normal capacity. So therefore, normal capacity is 40,000. Okay. So therefore, BLA will be 40,000. Okay. Now BOH. BOH means how much fixed overheads you had thought you will incur. Now that is not there in the question only. So one implied assumption I have not written over here, but in case you all wish, you all can write it. Whatever was the actual fixed overheads, budgeted was that figure only. So therefore, actual fixed overheads 55,000, actual fixed overheads 50,000, actual fixed overheads 7,000. Okay. So therefore, 55,000, 50,000, 7,000, absorb it over 40,000 units. Accordingly, you will be able to get 3 absorption rates. One is 1.375 per unit, one is 1.25 per unit, one is 0.175 per unit. Okay. Now, simple stuff, listen. What does this absorption rate mean? Whenever you actually produce 1 unit, charge 1.375 as overheads. Whenever you produce 1 unit, charge 1.25 rupees as overheads. Whenever you sell 1 unit, charge 0.175 as overheads. Achha, whenever you actually produce and actually sell, you charge this much amount of overheads. How much did you actually produce and sell? 35,000. So see over here, the amounts that I have highlighted in green. 35,000, 35,000, 35,000 into the absorption rates. Okay. So this will be giving you all absorbed amounts. But the moment you all do that particular thing, this will give you factory overheads, this will give you admin, this will give you your S&D over here. Okay. The moment you all do that, this is your cost of sales. Your sales was 8 lakh rupees. That was given to you, I guess, right in the beginning only. So therefore, profit as per cost accounts in this case will be 94,000. As per financial accounts, as was 90. Over here, it was 94,000. We all can start away with the reconciliation, which is almost the easiest one. Any profit you all can put on any side. I have put financial profit on this side. So obviously over here symbols will be financial increase, costing decrease. Over here I have put costing profit on this side. So therefore on the other side symbol will be costing increase, financial decrease. Okay. Now what are the reasons why the profit will be different? There are no stocks as such, forget of stocks. First of all, there is that interest income over here. Can we say this income, that 10,000 rupees is income only in financial, due to which financial profit will be higher. Financial profit will be higher. So therefore this is financial profit will be higher, no? So therefore, this particular thing will be coming on credit side, interest and dividend received. Okay. Then other things, see over here. In financial accounts, you wrote over here 1 lakh. Okay. In cost accounts, this amount was 93,250. So therefore, in costing amount was less, no? So therefore, it will be under absorption. In fact, it is under absorption over here also, and here also. So therefore, I have put a common heading over here, under absorption of overheads in costing. Take the difference between this and this. And this and this over here. That's it. Okay, these are your under absorption. The moment you do that, your reconciliation is altogether done. In case you all want, you all can make a reconciliation statement also. That is also altogether. Now, everybody who has been my student, please write below for my respect that you got this answer correct. Okay, nothing changed as compared to the question that we all did here. Okay, you should have got this question correct. Chali, this question is done. So guys, we'll start away with question number 5A. Now, what I am expected to be doing whenever ICAI is wrong, because this has almost become like, a repetitive task for me, that ICAI does something wrong. Now, whenever you read this question, you will start to be realizing, sir, same question we all have done in overheads chapter, exactly same. Yes, we all have done it. But ICAI did some error in this question also. Now, I am I'm pretty sure that, like, whenever the suggested will come out, they'll try to wrap it up in some way. But I'll try to be saying the correct thing first. So in the solution, I do not want that you all try to look at this particular data for the timing. Okay, do not look at this particular data. Okay, try to be looking at the other information, that is this particular column, which is correct over here. Okay, and towards the end, I'll explain whatever is that thing. Okay, so let's start it off. A machine shop has 6 identical drilling machines manned by 4 operators. There are 6 machines, but there are 4 operators. The machines cannot be worked without an operator being wholly engaged on it. So therefore, machine can only work if there is a dedicated operator for it. So can we say, if there are 4 operators, 6 machines, only 4 machines can be working no at one time? How can 6 machines work? The original cost of all these machines work out to 3 lakh rupees. Okay, that is one thing. So that is the original cost. Further, these particulars are furnished pertaining to a period of 4 months. In our question, that was of 6 months. This is of 4 months. Just be careful. Normal available hours per month, 156. Absenteeism without pay. So workers will not be getting, in this case, the wages for these 9 hours because it is without pay. Leave with pay. They will be getting the payment because it is leave with pay. Normal idle time. That is unavoidable hours. Please do remember, I think ICAI forgot it. Workers get paid for normal idle time. This is their error, not our error. Workers do get paid for normal idle time. When I started away with labor costing, I explained you the entire concept behind it. Okay, why do workers get paid for normal idle time? Further, so do remember that workers will get paid over here. In any case, this is leave with pay. They'll be getting paid over here. Okay, over here, they will not be getting paid. Okay, it is written without pay, no? Average rate of wages for 6-day hour, rupees 450. So therefore, you can take 450, you can divide by 6 over here. Okay, that will be giving you all the wage rate. Okay, so therefore, this will give you wage rate per hour. Further, production bonus estimated 20% of wages. So whatever the wages come, okay, 20% of that will be your bonus. Value of power consumed. Obviously, this is, I think, for 4 months only. Supervision and indirect labor, I guess this is for 4 months only. Lighting and electricity, I guess this is for 4 months only. These particulars are furnished for a year. Okay. Repairs and maintenance, including consumables, 2% of the value of the machines. Now, value of the machines in this case is 3 lakhs of all the machines into 2%. This will give you for a year into 4 divided by 12. You all can compute it. Okay, then. So I'll compute it only. 3 lakhs into 2% into 4 divided by 12. So therefore, this will be 2000. Depreciation works out to 15% of original cost. 3 lakhs into 15%. That is 45,000 into 4 by 12. So 15,000 rupees. Acha, other sundry work expenses 12,000. 12,000 is there for 1 year into 4 by 12. That will be 4,000. General management expenses allocated. So again, this is 24,000 per annum into 4 by 12. This will become 8,000. The machine shop has taken an annual insurance for all the 6 machines also. For this, amount is not given. Okay, amount is not given. Amount is not given. Okay. Do remember this. Actually, this question is for this part only. Given that CMHR, comprehensive machine hour rate for the 4 months period is 125 per machine hour, you are required to find out total amount of annual insurance premium. So therefore, try to find out the insurance for these 6 machines, and CMHR is given to you. In our question, which was there in the textbook, ditto same question, but that time insurance was also given and you were asked to find out CMHR. Now CMHR is given, try to find out insurance as a balancing figure. So let's try to be doing exactly of the same type that we all have done in class. Let's gather everything for a period of 4 months. And then we'll divide by the number of hours. You should be able to get your CMHR. And CMHR is there. So we'll try to find out insurance as a balancing figure. Everything in this case for a period of 4 months. Okay, so therefore I've made over here a statement. This is the statement for finding out insurance as a balancing figure. Everything for 4 months. Okay. So see, in this case, first of all, machine operator wages. Now those guys who run the machines, we all pay them also. Try to be thinking 156 hours. Out of that, they will not be getting paid for how many hours, beta? 9 hours, because it is absenteeism without pay. They'll be getting paid for this, they'll be getting paid for this. So therefore, those figures we will not subtract, beta. So 156 minus 9. So one worker gets paid for 147 hours. Okay. Likewise, now this is, I think so, this is per month, no? I think this data is all for 1 month only, into 4 months, into 4 operators. So therefore, 2352 hours, 2352 hours. And workers get paid at the rate of 450 for 6 hours. So therefore, they all get paid at the rate of 75. So 2352 into 75, 176, 400. That is whatever I must have written over here. Then there is production bonus 35,280, that is recorded over here. And then I must have copied these particular things 2,500, 8,500 and 4,500. And then all these things that I calculated 2,000, 15,000, 4,000, 8,000. 2,000, 15,000, 4,000, 8,000. The moment this part is done, we have got all the expenses excluding insurance, because insurance amount is not given. I've just done the total. Okay. Now, once you add insurance, you should try to arrive at your budgeted overheads. BOH divided by BLA. Now, BLA will be in terms of number of machine hours, because it is comprehensive machine hour rate. So therefore, we have to be finding out absorption rate in reference to machine hour. Now try to be thinking in 4 months period, machines will be working for how many hours? Can we say machine will be working for the same number of hours that the worker is running the machine? Okay, because worker only runs the machine, no? So number of hours are 156. Out of that, worker is not there for 9 hours. Whether without pay or with pay, doesn't matter, but he's not there, no? So machine is not running. Same way, 10 hours, he's not there, whether with pay or without pay, it does not matter to us, but he's not there, no, at that time. And even in normal idle time, he's eating his lunch and all. He's not there, no, to run the machine. So therefore, machine will not be running in this case for 9 hours, 10 hours, 5 hours. That's it. So therefore, machine will be running for these many hours in 1 month. And can we say only 4 machines can run at one time? You can be saying those are 4 operators. Or you can be saying even if there are 6 machines, ultimately only 4 machines will run because number of workers are less and you require 1 worker for 1 machine. Okay. So therefore, into 4 operators into 4 months. So therefore, number of machine hours will be coming to 2112. Bus. And that will give you your CMHR. But CMHR was given to you. That is 125. So this into this, if I do budgeted overheads in this case for the entire department must be 2,64,000. Okay. Now, in this case, see this figure no is coming higher than this. That is what I try to be thinking. What nonsense question here. This question ICAI should not have made. They should have ensured in this case that this number is higher than this. So actually insurance is coming as a negative figure. So therefore something is bloody wrong in the question. Okay. So, in this case, see the question first of all. Find out the total amount of annual insurance premium. See, this is the annual insurance premium, but it is coming as negative. So I will not even try to be thinking. Okay. Now, sometimes I try to be thinking what ICAI will be doing whenever they come out with the suggested. I honestly don't know. Then I thought that ICAI might be a bit idiotic. Okay. Now that is one of the things that I'm assuming. Okay. So what ICAI can be doing. Now, I don't know whether you will be doing that, you will get marks or not. I would not like to be saying. As per me, the question is all wrong. This figure is coming into a negative figure. Okay. Now, if somehow some people try to be saying, but sir, I got a positive figure. You could have done this, but as per me, that thing is wrong. What you could have done, from 156, you subtract 9 in any case. You subtract 5 also, thinking that 5 hours wages will be abnormal in nature. It is not abnormal, he is absent, okay, but he is absent with pay. So in any case, you will be paying him. And some people can be thinking, sir, in normal idle time, we don't pay, which is also wrong. For normal idle time, you actually pay. But if you do all these things wrong, okay, and then multiply by 4 operators, 4 months and 450 by 6, then in that case, this will be your wages, okay. Then 20% of that will also be changing. Then in that case, this figure comes lower and there is a balancing figure. Okay. Once you get this particular answer, this is for 4 months, you want for 12 months. So therefore you can multiply by 3. Okay. I honestly don't know what ICAI will be doing. In fact, sometimes I think they can be doing a third option also. Okay, some people like, actually you should only reduce 9 hours. Rest all the hours workers will be getting paid. Hereby, I reduce 9 only, but the answer is not matching. So therefore, I thought what ICAI can be doing, they can be reducing 9, 5 and 10. Somebody could have reduced only 9 and 5 also. Okay. So if that thing also you all want to be doing, please do that. Okay. In that you'll be getting some other answer. There it comes, negative or not, I have not tried. Okay. But as per me, this question is wrong. And those people who have solved it in this way should be getting their answer correct because the question is wrong. Okay. You all can tell me what all you all have done over here. But then in any case, please do remember insurance that you will be getting as a balancing figure over here, that will be for 4 months. Question says find out annual insurance premium. So in end, you'll have to multiply, okay, by 3 because this is the data for 4 months. No, to arrive at 12 months data, you need to be multiplying by 3, no, as such. Okay, chalo. So this thing is altogether done. Stupid question, yaar, but then abhi ICA made it. I have not made it. Okay, chali, done. Chale, we will do question number 5B. Now, this is in my book, it is there in standard costing. In module, it is there in budgetary control. So, whichever chapter you all wish to be writing, you all can. Okay, from budgetary control or standard costing. This question is on ratios. Okay, entire question is on ratios only. Okay, ratios in relation to fixed overheads. We all have done around 6 ratios. Okay, this is on that only. Let's do the question. We have exactly the same question. The difference is, in our question, the data is there. You have to find out the ratios. In this question, 2 ratios are given to you. You have to find out the data plus some other ratios. Okay. The following data is available for XYZ for the month of March 2025. Particulars and details. Standard working hours, 7 hours per day of 35 hours per week. Okay. So therefore, 7 hours per day of 35 of 5 hours per week. So therefore, it will be 35 hours per week. Okay. Likewise, there are 4 weeks. So therefore, 35 hours per week into 4 weeks. So therefore, this will be 140 hours. Maximum capacity number of employees, 60 employees. 60 employees, if they work for 4 weeks, 7 hours a day for 5 days per week, how many hours those guys will be able to work? So 60 into 140 will be giving you 8,400. Then, but actual number of employees are 42. 42 into 140, 5880. Further, actual capacity usage ratio. You have to be knowing the formula for this. Activity ratio is also called as volume ratio by us. Okay. So these 2 ratios are there. You are required to calculate actual hours worked. Okay. Standard hours for actual output. Okay. Standard capacity usage ratio and actual usage of budgeted capacity ratio. Okay. Now, one small thing. You have 42 employees. If 42 employees will work exactly in this particular manner, because this is standard data, okay, you will be able to work for 5880 hours. You will be able to work. I think this particular thing will be your normal capacity. You can be working for these many hours. I don't think so. This particular figure, is something that we all do. This is a max. If we have 60 employees, then we can be working for these many hours. So therefore, this is the capacity you can use. So therefore, this will be nothing but your practical capacity. Okay. I have exactly the same question. I think it will be there free on YouTube also, because all our lectures are there free on YouTube. You all can watch it. It will be there in the chapter of standard costing. Should be the last or the third last question. Should be one among them. Okay. So this is the practical capacity. Okay. You have to be finding out actual hours worked. See. Now please do remember that 5880 are not in this case actual hours worked, because this is based upon standard. So if 42 employees work as it is, work based upon whatever has been told to them, they'll be able to work for 5880 hours. This is your normal capacity, this is your budgeted capacity, whatever, okay, your budgeted hours, whatever you are called. Now, can we use one of the formulas to start off by? See, what I have done over here, first of all, I am trying to make a standard thing that we all do in all the questions on fixed overheads. You all have budget, you all have actual. Data is of 4 weeks, okay. Fixed overheads, I'm not interested because we are not trying to find out variances, okay. Working days, not interested, okay. Although I can find out the budgeted days, 5 days per week into 4 weeks, so therefore 20 days, but in actual it is how much I don't know. And to be very honest, I'm not interested also. Sir, why not interested? Because we don't have to find out calendar ratio, okay, so not interested. Okay, now see, in 4 weeks, how many hours you could have worked? I just now got that particular thing. That is 5880. That calculation I've shown over here, 5880, 42 employees into 7 hours per day into 5 days per week into 4 weeks. Okay. Now here output cannot be expressed in terms of units. You'll have to express it in form of standard hours only. So by working for 5880 hours, worker should have given an output of 5880. Okay. This data is there. This particular data is there. Okay. Rest, no actual data is there. So therefore this data is not there. This data is not there. We'll try to find out how these numbers have come. Okay. See. First of all, you all have some data with you. What is that? Actual capacity usage ratio. How do you find out actual capacity usage ratio? It is defined as actual capacity usage ratio is actual hours work divided by practical capacity into 100. Okay. This is actual capacity usage ratio. That thing was given to you as 65%. Okay. So therefore 65 is equal to actual hours work, that is going to be the balancing figure. Practical capacity I got for you over here, 8,400, this particular data, okay, into 100, find out actual hours worked as a balancing figure, okay. So actual hours worked in this case comes to 5460. So therefore actual hours worked are 5460 in bracket note number 1, okay. This should have been your first answer. Second, standard hours for actual output. For that, I would like to be using activity ratio or volume ratio. How do you find out the volume ratio? Volume ratio, the formula is actual output upon budgeted output into 100. Okay. Now, actual output, I don't know. I've left it like that only. Budgeted output was 5880 standard hours. Okay. And this ratio was 125%. So, 125 is equal to this upon this into 100. So I've taken 100 on this side. 1.25 is equal to this upon 5880. Okay. So therefore, in this case, actual output, try to find out as a balancing figure. So it will be 7350. So therefore, this is actual output in standard hours. So therefore, workers have given an output of 7350 standard hours. Try to think yourself. For an output of 7350 hours, workers should have taken how many hours? So 7350 only. If they have given an output of 7350 hours, they should have taken 7350 hours only. That exactly replies to your part 2. Standard hours for actual output. So, if some terms for you, because you are not my student, are a bit alien, I would always advise that, because we have done everything only by logic and not by formulas. Okay. Please go through our lectures of standard costing right from the beginning. Everything is only based upon common logic and nothing else. Okay. So therefore, based upon this, this is 7350. Okay. Then third one, standard capacity usage ratio. How do you define standard capacity usage ratio? It is normal capacity upon practical capacity into 100. This is normal capacity. This is practical capacity divided multiplied by 100 will be coming to 70%. And lastly, you all have one last ratio over here. Actual usage of budgeted capacity ratio. Actual usage of budgeted capacity usage ratio. Okay, so therefore that is nothing but actual hours work divided by budgeted hours into 100. Actual hours work we got over here 5460. Okay, budgeted hours was 5880. Answer should be coming to 92.857%. I've taken up to 3 decimals. You can be taking up to 2 also. These should have been your answers. I think so not many people would have got this answer correct. Okay, especially if you have mugged up all the things, then you might not have got this thing correct. In our books, as I've told, it's there on YouTube long time back also. Okay, last question of standard costing or third last question depends upon whatever I did in that batch. Okay, either the last question or the third last question. Please do comment if somebody got all the 4 things correct. Yeah, chali, this thing is altogether done. Chale, question number 5C, CVP analysis. Yeah, same question we have in our book also. Find out opportunity cost. What do you mean by opportunity cost? If you would not have done this, you would have done something else. You would have earned something, no, from there. Whatever you would have earned something from there, there is nothing but opportunity cost for you. Okay, let's do this question. A company can make any one of the 2 products, M or S, during the year. It can exercise only one option at the beginning of the year. Okay, so it can either make M or S. Can we say if you don't make M, you'll be making S? If you don't make S, you'll be making M only. Relevant information about the products for the next year is given below. Selling price minus variable cost will be giving you all contribution. Now, same thing, there is no difference between the question that you all have done in class and this one. Market demand is 3000, but capacity is 4. Tell me. The demand is 3000. You can make 4000 in your factory. How much will you make ultimately? 3000. No? For S, selling price minus variable cost. Demand is 8, but you can only make 7. So ultimately, how much will you make if you make S? 7000. I can't make only more than that. Whatever you might produce, in any case, fixed cost will remain to static only. You are required to compute opportunity cost for each of the products. Simple stuff it is. See, fixed cost in any case will get incurred. Let's ignore it. Okay. Calculation of the opportunity cost. Selling price minus variable cost will give you contribution. Multiply by number of units that I talk. 3000 over here, 7000 over here. Okay. That will give you total contribution. See, if you make M, you will not make S. So how much will you lose? 1,05,000. So therefore, that will become opportunity cost for M. Same way, if you ever make S, you will not make M then. How much will you lose? 90,000. So therefore, both of them will become opportunity cost for each other. Yeah, this question you would have got correct only. There was nothing in this question to be doing here. Okay, chal, done. Question number 6A, your theory. You could not have asked something better than this question here for getting free 5 marks. Classify the following items of expenses based upon functions. Functions means where does it come in your cost sheet. Okay. And variability means whether it is fixed, variable or semi-variable. So first of all, consumable stores. Consumable stores are those things that get consumed during the production. Something like coal or something. Okay. I think consumable stores is always a variable item. I think so. More you produce, more coal will be getting consumed. So therefore, its behavior is variable and obviously it is related to production. Okay. First one. Second, general manager's salary. I think it is admin. It comes in your cost sheet in admin. And I think salaries always remain fixed irrespective of quantity produced or sold. Then, delivery van expenses. I think this is selling or basically distribution expense. Okay. I think so. Delivery van expenses are semi-variable. There will be some fixed elements like the driver's salary up and so on. There will be some variable elements like petrol or something. Okay, so therefore that thing. Here now I've tried to give you all the logic also. Okay, so for delivery van, semi-variable, it is S&D expense. I've written that particular thing over here. Then compensation, fixed salary plus commission. Okay. Now, it should have been told that this is compensation for what? I try to be thinking that it must be compensation for selling something because it is commission based on sale. So, it could be compensation, say, to salesman or saleswoman. Okay. So, I think it will be your S&D only. And it is fixed salary plus commission. So, what do you all say? I think it should be semi-variable, no? Further. Rent of finished goods warehouse. Beta, rent is always fixed only. And it is finished goods warehouse. It is finished goods warehouse. Okay. So therefore, in this particular case now, why do you keep the goods in the warehouse? Why do you keep the finished goods in the warehouse? So therefore, I can distribute it at appropriate time. Okay, to my people. So therefore, this will be coming as part of S&D only. Okay. That's it about this particular question. Okay, there was nothing much. You should have got all these particular marks. Maximum, if I try to be thinking from your angle, you could have got this particular part wrong, especially in that this particular part. Rest, I think everybody would have got everything to correct only. Okay. Chali, this is altogether done. Chali, question number 6B. This is a theory question on labor costing. Now, You all have done exactly the same question. I have given exactly the same answer. But I have given something extra, that is a numerical example to be proving also. I am not going to be reading out the entire question, not the answer at least, but then I'll try to explain. I think this is one question that everybody solves here. Suggest a suitable incentive scheme to a factory for its workers, keeping in view the following. Entire gains of improved production should not be going to workers. Now this thing, this kind of a feature in your scheme is satisfied by Halsey also and Rowan also. In the name of the speed, quality should not suffer. So therefore, this feature is only there with the Rowan scheme. And the rate setting department, being newly established, is liable to commit mistakes. Now, this is slightly a controversial thing that I've explained in the class. Same lecture is there on YouTube also. Okay, listen. You have to be suggesting a scheme which has all these three features. Now, due to this second feature that the company wants, no, answer will be Rowan scheme only for sure. Okay. And you have to try to prove it by some kind of an example, although those guys have not asked you, but I think if it is a 5 marks question, no, it is your duty to be proving it. Okay. So what I have done, the same thing that I have done in class also, that let time allowed be anything, say 4 hours. Time taken will of course be lower than that. That is 3 hours. So therefore time saved will be 1 hour. Let the basic wage rate be rupees 5 per hour. So worker saved 1 hour. Okay. So he saved rupees 5. But then you will give him the bonus also. So therefore, you give him a bonus based upon the Rowan scheme, because we are going to be suggesting the Rowan scheme as such. So it will be time saved upon time allowed into basic wages. Basic wages will be number of hours taken into the rate per hour. So 15 rupees. So 1 divided by 4 into 15, 3.75. So worker saved 1 hour, that is rupees 5 for the company. Out of 5, we are giving only 3.75 to him as bonus. Remaining 1.25 is still with the company, no? Hence proved, because the entire gains of the improved production did not go to the workers, no, 1.25 still remained with the company. Then, in the name of the speed, quality should not suffer. If you all remember, under the Rowan scheme, if worker increases the speed, that is reduces the time taken, initially the bonus will increase also. But then if you increase the speed beyond half of the time allowed, the bonus will start to be falling. If a worker knows that by increasing the speed beyond a certain level, bonus will fall, he will not try to work at increased speeds. So automatically he will not work too fast, the quality will be maintained. Okay. So that is whatever is part 2 of the question. What I did in part 2, no, originally time taken was 3 hours. Let him increase the speed to 2 hours, let him increase the speed to 1 hour. So therefore, when he increased the speed to 2 hours and then to 1 hour, initially the bonus increased. At this level, when the job is completed at half the time, bonus is highest also. But if you increase the speed beyond this, bonus will fall. So therefore, then in that case, worker will not increase the speed because he knows that his bonus will be falling. Okay, this is part 2. Part 3, rate setting department is newly established. Okay, rate setting department is that department that sets the time allowed. Okay. So therefore, time allowed should be, say, 4 hours. By mistake, rate setting department was new. It set the time allowed to 10 hours. And say that the worker took 3 hours for it. Okay. If you will give bonus under Rowan scheme, it will be only coming to 10.5. Over here, it will be coming 17.5. Here, it is not bonus, it is loss. Because there was some mistake on the account of the rate setting department. So, bonus under Rowan is lower. Loss under Rowan is lower, and hence Rowan is a better scheme. I have not tried to explain, I know that, much in depth, because this is a very common question that is there in the module also that every professor solves. I think so you would have solved this entire question correct only. Okay, chali, all done. Hi guys, so last question now. This is question number 6C. This was a theory question on activity based costing and budgetary control. There were 2 parts for it. Discuss the usefulness or suitability of activity-based costing. This question was there for 4 marks. Okay, I have written the answer over here. It is simple answer. The other one, discuss the 4 components of budgetary control system. That also I have given the answer over here. Okay. Now, theory, I'm not trying to waste much of your time. If you would have done the theory, then in that case, you would have been able to answer all these particular questions. Okay. That's it for this entire question. This time, in fact, even in the theory question, you realized that there were actually the first 2 parts which were not completely theory. Like that question whereby we had to classify the overheads into fixed and variable and based upon function was not completely theory. Same way, the labor costing question was not completely theory. This was the only complete theory question. So those people who could not attempt the practical, this was still a okay question to be solving. So hey guys, my entire solving of my entire Jan 2026 is finally over. Now, just towards the end, my latest English batch, English Hindi mix, the latest one, which is of course a paid one, that is there on this link. Complete English batch is over here. These are the courses which are there on our website www.ajnext.com. Previous batch lectures are completely there on YouTube channel. You all can be going through that. Although the same lectures I have put on my website also. One advantage of seeing the lectures on the website, there are no ads and all the notes are there with you at all particular times. You don't have to be going anywhere. So in case you want to be watching the previous batch, then rather than on YouTube, you can join our free course also, whereby you will be getting the soft copy, you will be getting all the tests also that we all do, everything completely free. We don't charge money for it. Okay. Now, one thing I had thought in 2022, and that is like, whatever I am trying to be doing now also, we are trying to be ensuring that we give you the best logics and we give you the best concepts that will not only be useful for your examination purpose, because exams you have to clear once, but then in life you have to be doing each and every day, right? So we try to be doing our best for the students. I have done my part, and since 2022 we had decided this thing, how many people we all can help, we are trying to be helping. Okay, so everything comes free in case you are a student who wishes to study, okay, and not trying to listen to 100 people what to do, what not to do, ultimately end up in doing nothing. Then I will say that only see our course, that will be more than enough. Tell your friends also. See, I will tell you a very practical thing, and somebody might say it is a show-off statement, but I care a damn about those people. Most of the teachers who are teaching now were all our students of costing. Okay, all our students of costing. They have copied our notes, they have copied our way of teaching. In any case, we put all the things on YouTube free. They copy each and everything. Their only thing new that they all do is they come out with new marketing each and every time. And most of the students, whosoever professor you all have heard of, most of them were sitting in the theater whereby I used to be taking the lectures. Everything of standard costing, everything, all the concepts that we thought, that how it should be reaching to the students, once we taught them, they exactly try to replicate the same thing with zero contribution of their own towards this entire subject. I'm saying this thing because the students unnecessarily try to get pressurized by these students. This is important. This is, boss, you do the entire subject. It is such a lovely subject. Keep on doing it. You will like it. The simplest way to pass is to do the entire course. Don't skip out. Don't try to be thinking this is important, this is not. Okay. So everything is important and everything should be such that it should get absorbed into your mind like a very easy thing. That is whatever has been our objective. Okay, chali, I'm done for the day and hope to see you next time whenever the paper happens. Just spread a word about us here. We all try to do good work, no? I'll see you all next time. Bye.